morning, everybody. To my volunteers in the back, would you mind closing the door? Yes. Close one, and you'll watch everybody run. Close one of them, yeah. Now everybody's going to run in. And you close the second one, and we're ready to go. Okay, good morning, everybody. All right. Good day. Had an incredible meal last night at Esther. Anybody ever been to this place? Yeah? Pretty great, huh? Yeah, if you haven't been there, go there. It's pretty tremendous. Thanks for having us here in Sydney. What an amazing time we've had. Day one went incredibly well. I've gotten tremendous feedback. My email box is filled with PDFs of decks and pitches and invites to go drinking. And so I'll just announce that we're going to have a bar hop starting at 10 p.m. And then I understand you guys stopped serving alcohol at 12. I don't know what happened. I was here 10 years ago, and we went out at 12. So something's changed. So I'm just going to ask everybody to bring a backpack. You know what to put in it. But so we'll be climbing the bridge at about 3 or 4 a.m. And it's when you go at that time, my understanding is you don't have to pay, but you just have to quietly go over the fence. Apparently some people have done this before the bridge was actually a climb. But in all seriousness, we had a wonderful dinner last night. We had an amazing Angel University on Monday. And in talking to Fiona from New South Wales and some other folks, we're thinking about maybe coming back instead of a year from now, maybe in 6 months. I understand the weather's slightly better. Is that right? Oh, yeah. So people want us to come back. Very good. All right. So, and then maybe we'll do something called Founder University. We've sprinkled in some Founder University talks here. These are talks where we have people who have gotten their asses kicked starting companies, tell you exactly how to kick ass and where all the challenges are. Every day at our events, we start with money, people who can write checks. And so we did a lot of research on who's actually capable of writing a check and who's an active investor. And it's starting to pick up here. You're starting to see an angel class emerge. And certainly you have some venture capitalists. So let me just start the day by, once again, thanking Destination New South Wales and the New South Wales Government and Business Events Sydney. They gave us the ability to give away 98% of the tickets for free. Who's a founder who got a free ticket? Raise your hand. Keep your hand up if you would have paid for a ticket instead of working on your startup. So about half of you wouldn't have showed up, so that's good. Or you're being super generous. What we found is when we give those free tickets, people come and we break even on these events. The secret for how we're able to do these and why we do them is we invest in probably 3 or 4 of the companies that come out of each event that we meet. So hopefully we find 3 or 4 investments a year here and build that bridge between our 2 great cities. Okay, let me bring up our first group of speakers. Ben Nazarin is a venture capitalist and formerly an angel investor and one of the best ones in Silicon Valley. He also wears pretty sharp pants. I'm just assuming he's wearing the red ones. I haven't looked. Is it the red ones? Yeah. Oh, there they are. Boom. This is trademark. Stonely Baptiste is the co-founder partner of Urban.us. We've invested in a bunch of companies. Come on up, Stonely. And Samantha Wong is my new friend, Sam, from Blackbird Ventures here in Sydney. And we started sharing deal flow already. Good morning. Okay. So yesterday we talked to angels and syndicates. The venture capital space and writing slightly bigger checks, the $500K checks, the $1 million checks, has become more challenging because there's so many companies? Or is it more enjoyable because there's so many startups to pick from? Ben, when you think about how this has changed, you and I have been investing for over a decade, or you've been over a decade, I've been under a decade slightly. It's changed dramatically in the States, and I even can see it here. There's a lot of people starting. How do you pick who to give those big checks to? And has this become just a deluge of really high-quality companies? And how do you, if so, how do you pick?
Well, there's another factor that impacts sort of the challenges of picking and competing, which is the even larger deluge of capital. It's coming in from all sorts of sources. So you have had a meaningful increase in companies, but you've also had a much larger increase in capital. Across the increase in company quantity, you have generally seen an increase in company quality for the ones that get funded and survive, at least to a certain level. So I think the data right now is pretty clear over the last couple of years that there's a lot less true, high quality seed rounds or just seed rounds period being done, but at a lot larger dollars. So this does play into sort of how venture thinks about it. I think venture tends to be, venture has done seed off and on for the last, call it 6 years. Seed preceded venture through a lot of independent players, yourself included, myself included, Floodgate, first round. And then venture thought they were missing out, so they sort of got in the game, but they got in it very amateuristically and threw a $50,000 check into 100 companies and thought that would buy them access. Or Sequoia put money into literally every company in YC thinking that would be the right way to do it. And then they figured out that doesn't work because you don't get access by putting in money, you get in access by putting in time. So they all gave up, then they came back in. It's an in-between time right now. I think people have realized, if I just simplify it down, that it's about conviction. It's about companies that you feel excited about at a level that you can commit money and time. And so that does require a really high quality opportunity, people, a big idea, and a huge market if it works. I think you need all of that. And I think you are seeing those opportunities come more often because more people are trying.
Stonely, you've been investing for a couple of years now, and I think your average check size is 500, $1 million?
250.
250. So that puts you squarely in the seed fund. You co-lead rounds with me sometimes. So how are you dealing with, in America, just the unbelievable number of startups that are approaching us with, call it $10,000 a month to $50,000 a month in revenue? I mean, if we were sitting here 10 years ago, Ben and I would be laughing like, we didn't invest in any companies with money. We'd be giving them the investment to get to $10,000 or $50,000. We feel pretty good about it if they did. Now we're turning those same companies down. How do you deal with that in America?
Well, first of all, the sectors that we focus on, they're still really early to be transformed by technology. So things like built environment, government. So we still end up working with teams pretty early before they're at 10, 15K a month in revenue. Yeah, and I think it's maybe 10, 15% of companies that are building very meaningful companies that are going to get to revenue and ramp up pretty quickly because of the size of the markets. But we have to sort of see past the first lift, and it is a big lift for companies like Blockable, for example, to get off the ground and get to revenue.
And how do you make that decision to give money to a founder who doesn't yet have traction? Because that's what all founders want. They want to get money before they have traction. And I perceive that's getting harder and harder. I think you're a bit of a dying breed of a firm.
Right. Well, I mean, we believe in the, I don't know who said it first, but the lines, not dots thesis of investing, which is if you can find enough early proof points of a founder and a team's trajectory. They said they were going to do something, and then they did it, and they not only did it, they did more than they said they were going to do. Then you can start to gain confidence that the things that that they're projecting to do, that they'll at least get close, if not knock it out of the park. So it's a lot of looking at, well, what can you build as far as a prototype? What are the early pilot or even pipeline customers you can get conversations going with? What sort of team are you able to recruit? What other investors are you able to galvanize to your cause?
Yeah, and how many meetings or months on average does it seem like you're doing before you write that $250K check?
It really varies. Some of it is based on our own timing and investment cycle, but we've moved as quick as 4 weeks, and we've taken as long as 6 months to realize that we really want to work with someone.
So it is a long game for sure.
Absolutely.
Sam, educate us as to the market you're seeing here in Sydney, given the context of my questions for Ben and Stonely.
Sure, no problem. So when Blackbird got started in 2012,
Right into it.
When Blackbird got started in 2013, 2012, they first started fundraising. There was literally not really any capital left in the venture capital system here. We raised a 30 mil fund then. It was the largest fund of the time. Last year, 1.3 billion was raised in venture capital in Australia alone. So I think that speaks to the quality and quantity of opportunity here. We've certainly seen that in our portfolio. We've invested in about 45 companies now, and they've cumulatively raised $800 million in 5 years, and we only provided 20% of that. So I think that speaks to the opportunity here.
And what's the check size at Blackbird? And to the same question to Stoneleys, what's your range of, how quick you've moved to how long it's taken, but to get a yes?
The check size question is a little hard to answer in terms of averages because we like to say there's no check too small. Like we wrote a $150K check the other week because that's all they needed and they just needed to get started and we're really excited about the area. The largest check we've written is $27 million. So I guess our sweet spot though is that seed to Series A stage. So somewhere between a $1 and $3 million check and leading the round. That's what we love to do. And to support the companies for say 1 or 2 rounds here and then introduce them to Silicon Valley investors. That's one of our main kind of value props that we offer founders. In terms of like how long it takes us to make a decision, we love to optimize for a quick no rather than a slow yes, if at all possible. Having all been founders, we're very empathetic about how time is basically the most precious thing you have, and you don't want to kind of drag it out if you can't, if you can avoid it. Sorry. I think the shortest one was maybe a week. We'd known the founders a long time, and we're waiting for them to start their new company, and so it was quite easy to move on that one. There wasn't, honestly, we wouldn't have had anything to spend more time looking at because they're just getting started. Longest, well, in a way, Canva was the longest because when we first met them, they just were 2 people an idea, and it took them a year to find their CTO. Once they had the CTO in place, that's when we invested. So that was maybe you can consider that a long courtship, maybe.
Yeah, and you have now the most recent unicorn. Has that company changed how people perceive the market here? Because that company is so top of mind in America. A lot of people are using it in their startups, so it's come up a bunch of times. I remember becoming aware of it maybe 2 years ago. Just somebody said, "Oh, just use Canva for that. Just Canva for that." Boom, boom, boom. And I was like, "What is Canva?"
Verb, that's great.
Somebody took it out in the incubator and said, "Here, let me show you. You can make like anything in like seconds."
Look, I think so, but I think the precursor to that was really Atlassian. I think it's really hard to underestimate psychologically the impact of 2 guys, hacking something together out of their, dropping out of uni, maxing out their credit cards to build something, selling it globally around the world from the very beginning, not really taking venture capital until really the late growth stages and listing on the NASDAQ. I think that inspired a whole generation of entrepreneurs and inspired also the institutional capital market here to step in and fund this stuff because the great tragedy I think of maybe the last 10 years is that there have been some really fantastic Australian companies, Atlassian and Vato, Campaign Monitor, but they haven't really been venture capital funds. Well, none of them invested in those companies.
They had to come to the Bay Area to find investors and then come back here to.
Well, there were venture capital funds here. They just missed them. So
how did they miss them? What do you think happened? Were the venture capital firms at that time too cautious? Were they playing on their heels, as we say in America, instead of running down the court?
I wasn't around investing at that time, so this is sort of secondhand knowledge, but I think that was part of it, sort of focusing on earlier quick exits, sort of 3 to 5 year exits rather than holding out for the long term, investing in founders that maybe weren't doing their life's work or were sort of more MBA founders rather than product-centric founders. So that might be some of the reasons. But, I guess to answer the first question around Canva, 100%. And I think maybe even draw back to the other question that you proposed around what do you do when there's no revenue? People forget, Canva didn't really make meaningful revenue for the first 3 years. They just had the product out, had people loving it, using it, religiously monitored the number of designs created and published by users. And when they saw that they really had something that was working, that was addictive, they launched monetization properly.
When you look at the market here, Ben, and you see it starting to bubble up a bit, how do you assess the companies here? Do you believe that the companies here have just as good a shot at changing the world? Are they at an advantage because they're not part of the chaos and distraction of Silicon Valley? Are they at a disadvantage because there's not as much capital here? How would you assess it? I know you've only been on the ground for a week.
So, it's interesting. I think about what I'm seeing in Australia so far not that differently than what I thought about New York 6 years ago, or Canada 3 years ago, or Austin 2 years ago, or any place outside of Silicon Valley, in that there's a bunch of different dynamics that tend to happen. And I'm not from Silicon Valley, I moved there, but I've entirely consumed the Kool-Aid. I'm absolutely convinced that Silicon Valley is Shangri-La for entrepreneurs, and it does draw the best and brightest from around the world to it. It doesn't mean other people don't stay in their home countries and prosper, but they often come looking for relationships or capital. So as an example, when I look at New York, one of the reasons venture didn't spend a lot of time looking at New York until really Foursquare was the point you just made, early exits. There was this cash flow mindset. The investors locally, I spent 13 years in New York, and I still remember when someone said to me, well, how is it on a DCF model? And I was like, what are you talking about? And they said, well, discounted cash flow. I was like, oh my God, I haven't heard that since business school. I don't know. It was just so totally opposite of everything I thought about in Silicon Valley, but it was very much the New York way of thinking. So I can assume that there's a bit of that where you have what I've heard from some entrepreneurs is much less developed ecosystem of capital. So when you have supply of entrepreneurs growing, but demand growing at a slower clip, then that tends to disadvantage the entrepreneurs. The other thing I used to notice a lot in any community, and I assume is true here, the valuations are much better than they are in Silicon Valley, but to people locally, they might think they're extremely high. It could have been a reason that people missed out on opportunities that were growing at a certain pace. I don't think anybody's disadvantaged from being in any location, except that, Israel, another country that's done quite well of late with technology, it's another place where until Waze and one or two other companies, they didn't have any billion-dollar outcomes. So venture capitalists thought, it's too small. A bunch of entrepreneurs are going to shoot for a $100 million outcome. It's never going to be material. But then when they saw it start to happen, and it's funny how lemming-like this attitude is, there was a billion-dollar outcome, therefore there will be more, therefore I should pay attention and send people there, which I find somewhat humorous. But it is true that when you don't have an ecosystem developing in a certain way, it's harder for others to do it. And I think that boils down to sort of peer groups. Who do you have to look to? The thing I was always fascinated by moving from New York to Silicon Valley is in New York, when a young person that might have an entrepreneurial mindset, and I'm interested in how this is developing here, looks around for that person to admire, let's use just purely on a financial basis, they're going to see hedge fund folks and bankers and Wall Street types, and they're going to think, if I want to make a lot of money and have a big house in the Hamptons, that's what I have to do. In Silicon Valley, you look around and you see truly wealthy people. They're 28-year-old startup kids that cashed out for $700 million and are living life large. So seeing that that's possible gives people something to aspire to in a way that they don't get to do and they don't see it as being possible. Because part of it's you set your targets that you shoot for, and if what is success to an entrepreneur is a $30 million outcome of which they keep half, it'll be very hard for them to draw certain types of capital. So lastly, I'll say that the one big challenge I can see, and an entrepreneur brought this up, is it's not a particularly large market. So I mentioned Israel only because I found this fascinating company there, and I think it's a huge opportunity, and they just fundamentally don't want to leave Israel. I was like, okay, great, well, good luck building a company of size.
3 or 4 million customers.
Right, and here you've got a larger market, but
yeah.
If you're not willing to, the U.S. isn't always arrogant about its belief in where it stands in the world. I think it would merely argue that the U.S. and China are the two largest economies in the world, and so if you as an entrepreneur want to see your business grow, one would assume it's highly logical you'd want to tap into that environment. Sometimes investors can help you with that.
Stonely, what are your thoughts on what you've seen here since you've gotten here, the companies you've met with? Founders seem any different to you than the ones that you and I deal with every day in the Valley and in America?
No, I think, and that's a good thing, there's just as much enthusiasm and intelligence and creativity here. I'm very encouraged. I think, it really does come down to sort of how big their opportunity space is, if they're constrained to Australia, and contrarily, how willing they are to build a business that captures a more global opportunity. So obviously a week is not enough to assess business plans and models, but definitely encouraged by the entrepreneurs I've met so far.
Of your investments, how many are in the Bay Area versus not? Ballpark.
Ballpark, maybe 12 or 15 in the Bay Area out of 45.
Right. So this is something that people, I think, are making an incorrect assumption that venture capitalists and investors, seed investors and funds, are only investing in their backyard. It's actually changed, I think, in the last couple of years. How do you, Sam, convince venture capitalists? You said that was a big part of the value add at Blackbird. How do you approach them and say, hey, we think we got something, you should get involved? And what is the conversation typically like? And has that conversation changed over time since Canva, and since it's not just like an Atlassian, which I think people looked at was like, well, that's weird, you know, and now it's like, oh, well, now it's a trend, right? And the same exact thing happened in Stockholm, where now there's 9 unicorns, and people are like, oh, well, that's where unicorns are born. You just go to the magical forest, and there's a bunch of them. Just pull one out. How do you bring your little baby unicorns to Silicon Valley and present them?
Well, the thing about the companies that we back is that we have to see that they're global from day one. They have customers all around the world from the very beginning, and their customers don't even know or care that they're in Australia. So that usually necessitates actually either a sales and marketing office or the founders going back and forth from Silicon Valley and Australia very often. We also go over very often, and so we're maintaining our relationships with the people we've co-invested in the past and always looking to make more. You know, Index have been supporters of our portfolio, Felicis is another one, Lux, DFJ, and so we're keeping on their radar and speaking to them about, okay, what's interesting to you? Well, this is what we find interesting, and this company is doing really well. Just kind of the investor update kind of format, and then when they're ready to raise that round, the sort of Series A, B stage round, those investors sort of have already have a really good idea of who they are and what they've been doing, the progress. Perhaps they've already even met them. So it's actually quite an organic transition. It's pretty hard to turn up, get off the Qantas flight and turn up stone cold into, an Andreessen or an Excel's office and say, take me seriously, I promise everything I say in this, next half an hour is true, etc. So we are part of, increasing their believability when they are when the time is right.
Okay, just a quick question. Do you feel they hold founders here to a higher standard than ones in their backyard? Do they make them perform and have more performance in order to make an investment in a market 14 hours away?
I don't think that's necessarily true, but I think they're often surprised. Because it is a relatively more capital-constrained environment here. I think there is a slight sense in Silicon Valley that you couldn't possibly produce great engineers anywhere else. You couldn't possibly, you know what I mean? But you actually can, and in fact, there's a real asset to having at least your product and engineering here. We have great universities, great quality people. The government will give you almost 50 cents in the dollar back for everything you spend on hiring engineers. They'll stick around for more than a year. They cost about a third of what a Silicon Valley engineer costs. And
they can live in one of the 4 of the top 10 best cities voted to live in.
Are you sponsored by New South Wales?
No, I mean, actually, I can't say the other 3 names of those cities because they're not New South Wales, but I was just looking at the list and I was like, my God, San Francisco wouldn't be in the top 400 best cities to live. It's a horrible place to live. Cost of living, crime, etc., taxes. And then I was looking, I was like, wow, how do you have 4 of the top 10 cities? It's incredible. And I think actually that's a big advantage because people are leaving San Francisco now because of quality of life issues. And they believe they can build a company anywhere. How do you prepare the entrepreneur for Silicon Valley? They've never been there. You're taking them there to meet these
You've just got to go, and that's what we tell them from the very beginning. We run an accelerator program as well, StartMate, which is actually the precursor to Blackbird, and that is really taking companies from the first 12 months of their life. The first thing they do is get on a plane and go to San Francisco for a week and meet with investors and successful founders, and the idea is to ramp them right up really quickly as to what global standard excellence looks like, and you just build the muscle memory from there. We surround them. To your point around the ecosystem stuff, we surround them with the successful founders in our portfolio. So it's like here, Scott and Mike from Atlassian start mentoring Cliff and Mel from Canva, and they start mentoring Rory from Propeller.
And that's actually happened.
And this is happening.
True story,
is this beautiful circle of life thing that happens, and so in that way, the learnings get passed from one generation to another, and it compounds over time.
Let's talk a little bit about the dysfunctional nature of San Francisco right now. Do you think that this is holding us back, Ben? Or do you think it's just what we have to deal with the limited amount of housing and the number of people who want to be there, and we'll get through it. Because it has felt particularly dysfunctional the last 2 years.
I think it links in some ways to the point you were just asking about. Does the bar go up? And the thing about being in Florence during the Renaissance is every artist wants to be in Florence during the Renaissance. I'm sure the cost of stone huts went way up in Florence during the Renaissance, and I'm sure that there was housing crisis, and I'm sure there were a lot of homeless artists sleeping on steps. I'm not sure it's a curable reality, and I think that you've got a finite amount of real estate. San Francisco suffers from something that New York suffered from a long time, this much real estate and this many people that want to live in it. Extremely expensive. It's supply and demand. You can't fix supply and demand by having government intervention, I don't think. It's a personal view. But the payback for suffering that pain is the serendipity you get from being around the best and the brightest. This is not a commercial for a move to Silicon Valley, although I would comment that there's a bunch of other sides of the coin of the government rebates and everything else. So, as an example, I'll use Canada because they have a similar tax advantage structure for engineering. I funded a phenomenal entrepreneur in Canada, and he had a really visionary idea, and it went pretty well, but it didn't make it. And from the very beginning, my biggest worry was we either hit it out of the park or we die, because there's nobody to buy him. In Silicon Valley, if you've got world-quality talent, someone's going to buy your company for that talent. Those people are going to have soft landings, they're going to be given lucrative contracts, and you as an investor might actually recover your money or a portion of it. And I don't have any Australian companies yet, but in the one in Canada, and I've had more than one in Canada, and there's some that are doing quite well, when it doesn't work, nobody cares, and they just give you a job. So you get a job at no better than you would have gotten otherwise, and the investors get back zero. And so having this fiercely competitive community of the very best raises up everybody's boat, and it gives more possibilities. It gives you more access. Now, I've seen great success. This is drifting sort of more backwards in the question versus the current one, but in the split teams, where it is development office in X, fill in the blank, Sydney, okay, great. And then go to market in Y, usually San Francisco or New York in my own experience, although I'm sure there are businesses where London would be very appropriate or something else, where the CEO goes there, they're the go-to-market person, and they're just constantly out building businesses in terms of getting relationships and biggest clients. Like, where are your clients? Where do they live? Do they live here? Well, if they don't, then you need to go where they do live. And it's almost like, I think of it as there's this concept in physics of the entangled particle, where if you split the atom and it's in two different places at once, it still communicates. If you've got two really strong co-founders, that can work quite well. Because the CTO co-founder that stays at home and runs the engineering team here or wherever else can be in charge of that with the vision of the company, and the person that's doing go-to-market can be somewhere like the United States going to market. The key thing, though, is you've got to have, every entrepreneur needs a northern light to succeed. You've got to have that star shining in your face every single day that you know you have to reach. You've got to have the holy land that you need to travel to. Without that, you're going to spend a lot of time in the desert, and that's a good way to die. There's a lot of wandering that can happen if you don't have a journey ahead of you. Once you have two offices, it's a lot harder to reinforce that vision if you don't have somebody at the helm really pushing for it relentlessly. It doesn't take a very long time for people to go off course.
You got tribes, right? Yeah, but it is true, and it does seem like that's the high art right now is, hey, have your BD, sales, product in New York, Los Angeles, San Francisco, depending on where customers are, and then, hey, if you can run the table on talent like Vancouver, like in Vancouver and Slack has, or Yelp with their sales offices in Arizona, I believe, like they're just able to have huge, huge success in not competing
you need an unfair competitive advantage. I learned this long ago. I used to go to venture capitalists to try to learn what they did because I want to introduce them to my companies very much in exactly the same role that you have going to the U.S. And I remember I took a company in and he's like, no, I'm not going to fund it. I'm like, why not? It's great. It's better, faster, cheaper. And he said, well, we don't fund better, faster, cheaper, number one, because next year someone else will be better, faster, cheaper, and then I'm behind and I'm going to lose my money. And he said, two, they don't have an unfair competitive advantage. It's like, well, that would be unfair. It's like, I don't care, they have to have it. And so sometimes finding that perfect pocket, as an example, there's pockets of, as an example, the Mormon community in Salt Lake City happens to be very effective at telesales and customer service for whatever reason. So people
They're nice people.
They're incredibly nice people. And by the way, if you want to figure out how to sell, go sell God for 2 years door to door.
Oh my God, you're so right.
I can't think of much harder.
A launch festival next year in Salt Lake City. Launch festival sales edition. All right, we're going to take some questions. There's the microphone. And for those of you who are here for the first time, we have a great tradition. If somebody pitches from the microphone and they use the chance to ask a question in order to promote themselves or their service, we all groan. But we need to practice the groan. So I'm going to ask everybody to give their best groan. 3, 2, groan. Oh, God. So now that we've scared the bejesus out of anybody who was thinking about going up to that microphone, I saw about 4 people skedaddle. Anybody want to ask a really high-quality question? Line up right there. Stomy, I didn't ask you while we're getting some questions. Can you give everybody the sort of vision of Urban.us, why you exist and why you chose that particular vision for investing?
Sure, thanks. So we believe, we believe that that there are a number of industries that still have yet to be truly transformed by technology, and that those industries represent trillions of dollars of value as they shift and evolve. And we're already starting to see it in transportation and mobility, and we'll start seeing it soon in I think built environment and government. And the interconnectedness of the particular sectors that we're focused on is cities. These are the things that impact how we live and work and get around cities. And the real reason why that matters to us is thinking about the future of humanity and the future of sort of legacy of our own lives, what world we're leaving behind as more and more of humanity and society is based in cities. More and more of the economy is dependent on how successful cities are, but also the condition of the planet. There's this very deep interconnectedness. I mean, it's one of the most important things we can work on getting right, this piece of technology that we call the city. And so we set out 5 years ago on a mission to upgrade cities, and there's a lot of top-down solutions being worked on, but we felt like startups were already showing a lot of meaningful impact, from Nest to Waze to Uber, Lyft, Airbnb, and at the same time creating a lot of shareholder value and returns for their investors. So.
Okay, your name and a concise question.
Hi, my name is Jess. You talked about spending up to 6 months to invest in some companies. Is there any other value that you provide in that time? Mentorship, introductions, those kinds of things?
Absolutely. So in addition to building a fund over the last 5 years, we've also built an online community, sort of a distributed network of mentors, co-investors, other founders. And so when we meet someone who is doing meaningful work with founders or on cities in one of the sectors that we're interested in, we invite them to join us in a private Slack group. We have events here and there around the world, and founders that we like that maybe are too early or we want to see some more proof points, we invite them to join that community and to benefit from the connections there.
Great. Another question.
I'm much smaller than Alec, I'm afraid.
You can just bend it. Yeah, you can bend that.
Bend?
way. Yeah, no, you can bend it down.
Bend it like Beckham.
There you go. Perfect.
My name's Alan Timms. I came up from Melbourne yesterday. And
Welcome.
Pardon?
I said welcome.
Thank you.
Thanks for making the trip.
And primarily because this, to me, may seem to be like a holy grail. Venture capital in Australia, you're inquiring about the difference between Australia to America. You have to remember that America is a magnitude greater than Australia. You're 350 million, we're 25. Financing in this country primarily revolves around banks who have the money. They lend to people on housing, because housing is what banks like to lend money on. Banks don't like to lend money on speculative things where they might lose something. The housing markets in Australia are such that if you look at the top, say, 5 billionaires...
This is an incredible preamble. Let's cycle it down to let's land the plane here. What's the question?
Well, the question is, how can we as Australians access you people, Americans, who are here for a day, and once you've gone, you've gone? I mean, are we able to contact you to say, look, I've got an idea which may interest you. It's a worldwide concept.
Yep. Great. Good question.
At the end of the thing.
How do we stay in touch? Number one, jason@calacanis.com is my email. Mm-hmm. Number two, I'm at Jason on Twitter, and I'm on it all day long. I'm addicted. We do something called Launch Incubator, which we accept people from around the world. In fact, We're probably going to accept 2 or 3 companies here into the incubator. And then finally, we have something called Founder.University that we run 6 times a year that I encourage everybody to apply to, which is a 3-day course in San Francisco. It's free, and we accept 60 people. Usually about 400 apply, so 1 in 6 or 7 people get in. And that's how we get to know investments down here. I'm not sure how, Ben, you're looking at it, or Stonely, how you're looking at staying in touch with these kind of markets. Do you have the email?
So I say a bunch of answers to this one. This event is an example of one exceptional event, and there are others where you come and you basically get that time. You know, I think that entrepreneurs have, I was an entrepreneur for 25 years, I believe that the minute you become an entrepreneur, you have almost a God-given right to walk up to anybody and ask them for help or tell them what you're doing. Now, so having said that, I've just opened myself up to everybody in this entire room pitching me, and that is fine.
It's your job.
It is my job. And it's interesting, not all partners truly understand that, by the way.
I know, isn't it weird? They're just like, I love these venture capitalists who are like, when you email me, here's how to properly email me. It's like, I'm sorry, are we in the military? Like a proper way to salute you? Like it's like, I emailed
remember
you
I was
my
speaking
idea.
somewhere and I had to go to something immediately after, and I was really bummed out because I didn't get to hang out and hear all the pitches. And one of my friends was like, really, you like that? I'm like, well, I'm not saying I like it, but it is what I get paid to do. Having said that, I will just ask for one thing. So selling, the word no is the beginning of the selling process. The word no is the end of the fundraising process. I'm willing to listen to any pitch, but if it's not a fit, I'm going to tell you that. I love Sam's point of a fast no. My attitude is, I can't get to yes in one meeting, but I can get to no. And if I get to no, I'm not going to change my view because you say, well, actually, you're wrong about X or Y. I might be wrong about X, Y. I also built a site called pitchben.com, pitch, B-E-N, where anybody, anywhere in the world, and people from all over the world actually do, can go online and in 1 minute give me a video pitch, and I promise to give a 1 minute response. A very candid, if you can't tell already, I'm a pretty candid person, response to what I think about the pitch. Now, I will tell you that sometimes my response is, that wasn't a pitch. That was a minute of meandering around telling me that, you know, I don't know, the color purple is a really wonderful color, and I was thinking the other day that if I could take that. So, you know, don't put garbage in that. Let's not throw trash on the floor and pretend it's food. But, you know, email, LinkedIn.
He's got so many great one-liners. Is somebody writing these down?
I had somebody give me well, I won't go there, but.
We're going to have to get like a book of Ben. And it will just be like, if you throw trash on the floor, it's not dinner.
Someone did, there was a scene I love in, I hate to go there, but what was that movie with John Travolta as a sleazy hitman? It was a great movie.
Pulp Fiction?
Pulp Fiction.
Pulp Fiction.
And
Yeah,
I
be
won't
careful
quote it.
about which scene we're talking
Yeah,
about.
I'm not going to quote the
Couple of
scene, but
scenes.
it was like, you know, if you throw a can of garbage on my lawn, you know, you can't pretend that you're doing me a favor. So pitchben.com, LinkedIn is okay. I try, over the transom stuff is hard. Always look for a path. This is a path. This is a path to coming up and saying, hi, I'm Ben, can I tell you what I do? You know, but try. I will read every email. Last point I'll make, I'll read the emails that come in. Receiving an unsolicited email does not mean that I am committed to responding to it.
Yeah, sometimes there'll be a day when you get 100 or 200 or 300. It's not
I'll read
possible.
it. Get the point done in line 1. Last tip. The subject line should tell me what you do. Like in the email, if you can put it in, Uber for school buses. Okay, good to know.
So you're saying be concise, be direct, and respect the person's time. This is critical. One other thing I'll say, just since we're going to go through tips of, you know, best practices or hacks for pitching folks, the goal is not to get an investment when you meet a person at a conference. It's for them to know who you are, what you do, say thank you, be respectful of their time, and let the next person pitch them. Well, some people seem like they're standing there in front of you. Sometimes you all have this experience. Like, well, what do you think of my idea? Will you fund it? And it's
Here's my checkbook here.
And it's like, oh my God, you have no idea how this works. Like, we don't go to a conference with checks and then just take them out and hand them around. Like, there's actually a process here. So meet the person. If they saying, would you invest in something like this? That's not the right time to say. I would say, what you'd like to say is, I was hoping to email and follow up with you and maybe just keep you informed of my progress because we're working really hard. Now, how can the investor say no? It's like, yeah, of course. And if you can't get their email, you've disqualified yourself from being an entrepreneur. What are your tips, Sam, for great ways to interact with investors in a healthy, productive way?
I don't have my own video website, but I love that.
Yeah, you can steal it.
Everybody steal, all of you.
Pitch
Then
Sam.
Pitch everybody on the planet,
Okay.
it'll be good.
I actually think, like, to abstract it out a little bit more, like, reverse engineer what's worked for successful founders. Go speak to them and say, like, tell me how you ran your process, who are the great people you had to deal with, who should I be pitching? You know, the Australian VC community or investment community is pretty small. Like, we all blog about what we're interested in. We tweet, you know, this is what I'm looking at the moment, clean meat. And anybody working on that, reach out. It's, you know, I think kind of problem-solving kind of
Researching your
mentality.
targets. What an incredible idea.
Qualify your lead, yeah.
Yeah, I mean, it's amazing. Sometimes we'll get an email that'll be BCC'd, and you can tell it's been pasted because Gmail makes it like light purple or something, back to purple. It's like, what are we doing here? You're BCCing 100 investors, an 8-page life story? This isn't just weird. Stonely, tips, pro tips, and then things not to do, things that work, things that maybe will disqualify you even.
Yeah, I think what's important is to understand the psychology of investors, and also your own psychology, in that you know, investors want to get as early as possible access to the best founders, and they don't want to have any pressure to invest. They want to be able to get excited and invest at their own pace. But having said that, VCs respond to FOMO and time pressure, price pressure. And so as a founder, you sort of have to create a bucket of folks that you actually do want to slow roll building a relationship, and then the folks that you would want to be part of a syndicate, that you want to run a tight process, know your target, know your goal, know your timeline, and have folks run through your process. And so on this side of the table, I can appreciate when a founder approaches me from either side, where obviously the preference is that a founder, before they even have an idea, would want to build a relationship with me. Hey, I'm super talented, I've done these things, but I'm interested in these sectors that you've invested in. Can we get to know each other? How can I tap in and add value? And you can maybe help me think through my next idea.
Okay, one question, lightning and tight, go.
Hi, my name is Clive. My question is around disclosure to investors, especially that most investors don't necessarily sign NDAs. For a startup that's asking for seed funding, how do you, and with a long product roadmap, how do you, or when is the right time to actually disclose to the investor, that this is your eventual idea, and there are many steps to get there, without necessarily giving them too much and risking your idea?
Your idea is not unique in the world. 1,000 other people have had it in all likelihood, and you probably overvalue it. And if you ask for an NDA or you're trying to protect it, you've probably disqualified yourself, and you'll come across as very weird to the investment community because they do not have the time to steal your idea. There are too many opportunities out there for them to pursue than to take your idea, which is in all likelihood not going to work because most ideas don't, to then go start a company around it. You might want to very deeply look at their portfolio, and if you have a direct competitor and you're trying to kill Uber, you may not want to pitch me your solution to kill Uber. That doesn't mean I'm going to pick up the phone and call Uber and say, oh my God, you may not have thought about this, but somebody's going to pay the drivers more. Right? So this is how founders think. They're deranged sometimes, and they overvalue their ideas, or patents and this kind of stuff. Like, you haven't even built a product, you're patenting it, really? Like, I mean, maybe if you're in some medical space, but any general thoughts on this that I didn't cover?
Think maybe a different way of thinking about it is, we can only make a decision on the information we have. If we have almost no information, it's going to be a no. So it's the risk you might have to take, and agree with everything Jason said.
All right, let's give it up for Sam, Stonely, and Ben. Well done. Okay. So one of the great venture capital firms in Silicon Valley to be formed in the last decade is Social Capital Partnership. My good friend Chamath Palihapitiya started this firm, and one of his secret weapons was the experience he had growing Facebook from 10 million to 1 billion users. And the team he had there, a lot of them came over to Social Capital, and what Social Capital does better than any other firm is analysis of data and growth strategies, in my mind. And Andy Arts is a partner at Social Capital. He came here from halfway around the world to share with you how they do that. Please give a warm Sydney welcome to Andy Arts.
Hello, thank you so much for having me today. Unlike Jason, I actually love San Francisco. It's the only city in the world where you can get venture-backed weed delivered to you on an electric scooter. So I'm a happy resident. I'm a partner at Social Capital. And I wanted to talk to you today about something I've been thinking about for a while. It's this intersection between all the concepts that we know to be true in finance and everything I've learned about growing your startup and how that applies to going to market and marketing. So I'm Andy Arts. I started my career at IBM. Then I left, got out of there as quickly as I could to join a gaming startup in the social gaming days called OMG Pop in New York. We spent 5 years making a lot of games that no one played except Asian teenagers in California. And then we made one game that a lot of people played. It was the fastest growing game of its time called Draw Something. Just to give you a sense of the time scale, we launched this in February as the company was running out of money. I fired my girlfriend, and then 2 weeks later, the company was making $1 million a day. We sold the company 4 days after the peak to Zynga for $210 million in cash, and I left a month later. And that's how I joined the dark side of VC. So that's a little bit about me. At Social Capital, our mission is to advance humanity by solving the world's hardest problems. Essentially, we're trying to invest in things that will transform society in a positive way, and doing that in investing in for-profit businesses. So it's not strictly B corporations, it's not nonprofit, but it's also not, we're not going to be the ones that are leading the Series A in Snapchat, most likely. We do that by finding the best companies and then making them better. And tactically what that means, as an introvert myself, I'd much rather have algorithms doing the work for me to source companies. Being on stage and filtering, taking lots of coffee meetings is not for us. So we're monitoring many, many data sets. We spend a few $1 million to buy a bunch of data, and then we're constantly combing through that using a bunch of signals. One example is if you post a director of marketing application on a job site, we see that, we'll flag that and score that. A director of sales application, if you're hiring for them, it probably means that you're growing revenue. So a lot of different signals that you probably don't think about. We're monitoring, tracking to see if there's any potential to invest. Credit card panels are another good source of data where we can see are consumers actually buying and consuming your service. And so we do all that, and one of the unique things that's different about us is when you pitch us, we have a team of 19 folks that will actually log into your database, analyze a bunch of data, prepare a bunch of reports, share it back to you to try to give you a sense of what we're seeing about your business and how you compare to all the competitors that we've seen in those in your industry. And then we spend a lot of time helping our companies afterwards. One of the metrics we track is the multiple on invested capital for the companies we work with. So on average, companies we work with in our portfolio, we don't work with all of them, but there's about a 6x multiple versus about a 2x for the companies we don't. So we like to toot our own horn that we can actually help the companies. And right now we're exploring this really interesting initiative, which we're excited to bring to Australia soon, called Capital as a Service. So we're basically making investment decisions strictly on data alone. The rule is that we can't meet any founder face-to-face or have any human interaction. We've considered about 5,000 companies worldwide to date, and we've written 76 investments. There are a few bugs in the system, so we're trying our best to avoid fraud. I would please advise anyone against applying fraudulently. We will most likely flag you, but if you get through, that would not be good. And it also reduces a lot of bias in the system. So, on gender, on race, these are things that we care about a lot. And by eliminating any human component, we can just focus on the data and the quality of the business. How we work with startups. Here's a Series A company. Oh, looks like I gave away the punchline. So here's a Series A company we invested in, about $1 million a year in annual revenue back in 2013. And these slides, looks like, well, I'll give you, the narrative is, we invested early on, we started meeting with them weekly, and we set up these weekly cadence of experiments where we sit down with the CEO, the CMO, the head of growth, and we look at the metrics that matter most. So this is a B2B SaaS business. We started meeting with them in September 2013, and for 11 months, we conducted all these experiments to figure out how do we actually move something that matters here. So in this case, you sign up for the product, and you have to import some data, and if you're a non-technical person, you have to talk to an engineer to get a bunch of data plugged into your system. And nothing we tried was moving. Then we had this idea, what if we borrowed the concept of a Facebook contact importer? When you log into Facebook for the first time, you import all your contacts, and bring that over to a B2B SaaS company. For when you log in for the first time, how do you import all the data about your company into this product? And had a step function change and improvement. So we noticed overnight, holy crap, this was a transformative change for this company. And I show this graph for two reasons. First of all, the time between the two arrows is 11 months. Don't expect these changes to happen overnight. Second of all, when they do happen, the changes that you want to look for are often of this order of magnitude, 2x, 3x, not 5, 10%. A lot of people mistake growth for these small tweaks of optimizing these things that don't really matter. This is what true experiments in growth will result in. Over time, we set our sights on pricing. In terms of revenue retention, this is a graph that a lot of investors will look at a lot. If you're in the SaaS world, you know this graph intimately. 100% of your revenue on month one will usually decline by some percent. You'll have customers that churn. And so this was a company that was doing quite well. Again, it's at 5 million ARR at this point. It raised its Series B, but it had about 10% month one churn. And over time, you can kind of see that continue to degrade. So we came up with this idea of reorienting pricing and switching to a jobs to be done model, meaning that we charge people, we bundle different services together, and we charge people based on the value we were providing, which makes a lot of intuitive sense, but a lot of times it's very hard to test pricing because you don't have, there's a lot of ramifications if you get it wrong. You can lose revenue, you can get nasty grams from users who find out that they're getting charged different prices. And to give you a sense of the order of magnitude of this change, this is 18 months of data for those early cohorts where the revenue was declining. After we launched this change, massive increase, 20 points of revenue retention, and it persisted. This was the single most important thing we've been able to help the company with, and it has completely affected the trajectory of the company. They're now over $1 billion in valuation, doing close to 90 million in annual recurring revenue. And shortly after that, we spent a lot of time looking at their marketing dollars. So if you're running a company, you probably have a chart that looks like this. Where am I spending money? What's the efficacy of that? What are my costs? This is probably as advanced as it gets for a lot of companies, but there's a much greater level of depth we can get to, which I'm excited to share with you today. And so then we helped them with that. That was sort of the end of the 4-year journey we've had with this company to get them to where they are today. So that's kind of a little bit about context about me, about Social Capital, about what we do. I wanted to give you a few tips on how you can be more like this guy. So in 1977, Buffett described to his shareholders 4 criteria on which he would buy his stocks. So he wanted to buy companies that he can understand, with favorable long-term prospects, operated by honest, ethical, and competent people, and available at a very attractive price. So the same principles that he uses to buy stocks, you can think about as a founder to grow your company. So the idea of buying a stock in a business that he can understand should apply to you in terms of building a customer acquisition funnel that's a very simple customer journey that you can tell your grandma, with favorable long-term prospects. This is my favorite thing to think about. How do you know that what you're selling to the market can scale? You know what your CAC is today, you know what your LTV is today, you know what your growth rate looks like, but how do you know if you can continue scaling this $1 million more, $50 million more, to $1 billion? What does that look like? What are the numerical ways we can think about that? Operated by honest and competent people. So if you think about your users, who are your highly engaged, loyal users? How do you find those users? And how do you measure them? And then available at a very attractive price. This concept is thinking about acquiring users as if you would be buying a financial instrument, right? So if you want to go buy a stock, you want to buy an undervalued stock. You want to buy undervalued bonds. In the same way, you want to buy undervalued users. So what does that actually mean? So the first principle, we want the funnel to be one we can understand. I rarely see companies map out their customer acquisition funnel in a 2-dimensional space. This is the first place I start with companies when we work together. Think about all the things you're doing and try to create some linear flow. So this is an example of 5 different things at the awareness stage that a company's doing to get them through 4 different parts of the funnel. We can do a little bit better if we think about a flow chart where everyone is in the funnel and say, okay, at a certain stage you're a lead, you're completing a sign-up. If you're not completing a sign-up, what's happening to you? So think about, a lot of people forget that if you stop at a point in the funnel, you're dead. It's actually not true. You go into a different stage. So if you don't sign up, you're actually in a nurture campaign, which is going to email you to try to get you to sign up. It's going to ping you constantly. And so mapping this out is really critical. A lot of people just forget to do this. Once you do that, there's a numerical approach you can take, which says, let me look at every single landing page, email, ad impression that I've served over time. If you're early stage, you won't have that much to look at, so it's a pretty easy exercise. And let me look at everyone who's ever converted to my product, everyone who's ever paid me or done an engaging action, and figure out the probability that that impression or ebook or website was correlated with success. It turns out that there's usually a few core assets, landing pages, that will actually drive conversion. and there's a lot of stuff that's useless. In this case, you can see the team pricing page. Obviously, the company page doesn't matter. Podcast page doesn't matter. So why are you paying someone to make all these podcasts if they're not actually driving conversion? And this is not to say they were the last step before conversion. This was to say, were they ever involved in affecting a user who converted? So principle number 2, we want the businesses to have favorable long-term prospects. So we want the customer acquisition funnel to scale linearly or superlinearly. So when I think about scale, there's really one scatter plot that I love to look at. And it's basically saying, how many customers have I acquired on a cumulative basis? Plot that against how much marketing I've spent on a cumulative basis. And marketing, a lot of people will think, oh, that's just ad spend. Well, it's not just ad spend. It's everything that you've spent money on to go to market. So salespeople, bonuses, CRMs, software integration, data that you've bought. So if you think about that, you've invested all this money. You're an investor as a founder. You're allocating capital, and you're getting some return on that. So this is a business that was raising a Series B in June 2016, backed by a top-tier VC, and they came in and pitched us. And so we saw this graph, and we said, wow, this looks really good. And then we passed on the company. We didn't have the opportunity to invest at the time. They came back 9 months later and said, hey, we're raising again. We plotted their data on this chart. And we said, oh, something's happening here. They're not growing as quickly as they used to. So what's actually going on? So what we can do here, plot every single month. You can do this for days, for weeks, for months, to say, okay, for a given month, how much did you spend? And spend is a function of all the efforts that you've done to go to market versus how many customers did you acquire? What was the results of all that effort you did? And for that first 12 months leading up to the Series B, things looked quite good. There was some element of linearity involved. After they raised that, they struggled to figure out where they could spend more money to acquire more customers. So the subsequent 9 dots look like this. They spent more money on radio ads. They spent more money on billboards. They hired a bunch of people to hand out promo codes in subway stations. Every single month they spent more and more money, but there seemed to be a capped ceiling to how many users wanted to use the service. So the question I like to think about is, what is true demand for your product? How many potential users does your product serve? And what is the upper limit, if there is an upper limit to the level of scale? Is it an upper limit to your product, or is it actually just an upper limit to the acquisition channel you're using? It's very easy to think about search engine marketing. There's a finite number of search queries, right? So that's kind of the natural analogy, but this is true of your product for anything in the world you do on any channel. So thinking about that, extrapolating that is really something I like to meditate on a lot. And we can do this for all startups we see. So it's not just one startup in isolation, but every startup in every category we can say, how linear, how super linear do these businesses behave? And you can see, here's the company we're talking about. It's basically random at best. They're spending more money. They're just throwing it blindly and not getting any more results of their effort. You can see in the upper right, this company in the orange, R squared of 0.94. It's one of the best businesses we've seen of all time in terms of their ability to predictively acquire more customers. We want the business to be operated by honest and competent people. So we want to find loyal and engaged users. What does that look like? So our favorite graph to look at, which I encourage all of you to run no matter what your scale is. If you're an investor, I would make sure you always ask this question, is how frequently does your users engage on a last 28 days basis? Why 28 days? Because it's 4 weeks. It just removes any bias from any month based on the length of the month. So if you plot the last 28 days, a histogram of the number of days a user engaged, the exact number of days a user engaged, you'll get a graph that could look something like this. On the left-hand side, you'll see that the majority of users only engaged once in the last 28 days. That makes sense. They came and they tried your product, they left. It wasn't for them. It starts to decline after that. But you see this bump at 18, 19, 20 days. So a bunch of users are using it 19 and 20 days a month. And then you see this other bump at 28 days. So what's going on there? These users who used it 28 out of the last 28 days are your power users. So you have to ask yourself, what are they doing? What is special about them? What are they finding value within your service? This specific company is a chat app for teams, and it has 2 functions. You can use it in a social manner, or you can use it in a business setting. And so there's no surprise that 19 days out of the month people use it. It corresponds with 5 out of 7 days a week, Monday through Friday for business. And so when you adjust this to a last 28 days basis, people are using this product 17 and a half days a month out of 28 days. Facebook, by comparison, is 19, best in class in the world. Instagram, just underneath that at 16 and a half. And my metrics on those 2 are slightly old, so I'm pretty sure they've flipped by now. But when you see this, and you see a company where users are falling in love with it head over heels, you can plot this last 28 days. You can also plot this last 90, if it makes more sense for a quarterly use case. This is an instant, this for us is an instant decision to invest. If you want to go a level deeper, you can say, these axes got a little messed up, but mixed. So there's two types of use cases, social or business, or mixed. And you can see, you want to see the smiley graph bend as it goes up and to the right. And what you see is that there's a huge number of users who are using the product for both social and business that are engaged 28 out of 28 days. So what you do when you see this is you go and you write the query to figure out who those users are and ask yourself, okay, what are they doing? They're using both social and business. Another question you can ask is, are they part of multiple teams or single teams? So if you think about, you know, like Asana, HipChat, Trello, Slack, all these companies where you can have be interacting with one company or multiple companies, what happens to engagement of your users as they use more companies? So that you see this network effect start to unbundle. And so when people say network effect, I think a lot of people misuse the words. This is a numerical way to visualize what a network effect looks like. People who are in multiple teams have higher engagement on a last 28 days basis than people who are part of a single team. So that, just think about that for a second. That's a precise way of saying, of demonstrating what a true network effect is. Another thing you can think about in terms of fraud, if anyone's a victim of this, fraud is easily caught by speed at which users are moving through your funnel. So what we'll like to plot is a cumulative distribution function of the number of users who have converted to your app versus time. So you can see on the x-axis here's time after their first visit. About 80% of people have converted within 13 days. That's where those two lines intersect. And so you have this graph. You kind of every product has a given baseline of how quickly users will convert from your funnel for a given acquisition source. So what this tells us is that as soon as someone clicks a paid Google ad, 60% will convert on the spot. But over time, over the next, call it month, we'll have another, the incremental 40% will convert over the month. So if there's any deviation from this graph, we know there's fraud. We also know that we'll get 60% of the value of our efforts up front. So over time, you can apply a multiplier on top of that to know what your end result is going to be. It lets you run experiments really quickly without having to wait a whole month to capture all of the data. And you can compare it across acquisition channels. So the behavior is very different on Twitter versus search versus Google Ads. This is a really fun trick which helps you understand the psychology of your users. So if anyone is familiar with SEO, you don't know organic keywords that your users are searching for anymore. There's a tool that we have invested in called Keyword Hero. It will connect with your Google Analytics account and probabilistically try to determine that. And so they will estimate what organic search keywords your users are searching for to find your service. This is really relevant to anyone at any stage. Here's an example, a hypothetical example of a flower shop. You can see that users who search for order flowers have spent $265 on average, whereas users who spent buy roses have an equal number of visits but have spent $0. So this gives you a way of understanding on an organic user basis, without spending $1, what users are searching for to try to use your product. And the last principle, you want to buy businesses at an attractive price. In the same way with your customer acquisition funnel, you want to try to acquire users at a very attractive price. So what do we mean by that? Has anyone bought a bond before? Is anyone familiar with coupon bonds? 3 people, great. Okay, so essentially a bond, it's a financial instrument. The way it works is there's some principal up front, there's an interest rate over some period, and you get these coupons that you clip over time. The argument that we like to think about is, the upfront cash outlay, the price of the bond is the CAC, and the coupons and the amount you get at maturity are the LTV. So a bond is simple. You spend some money up front to get a bond. Over time, you clip your coupons. You get paid back for the amount of the bond, and you have the total value. On an ad, on customer acquisition, on anything go-to-market related, you spend some money up front, you get some cohort revenue over time. Right? So your users are paying you variable rates over time. They're expanding, they're churning, and you have some total LTV. It's the exact same thing. So as you think about that, how do you actually know what's going to happen to the price of your LTV to CAC? That's the sort of the analogy of the bond price as you attempt to scale. A lot of folks will look at their LTV to CAC over time and they'll plot something that looks like this. They'll say, okay, my LTV to CAC is 2x, I'm doing great, but this doesn't tell you anything about scale. Similar to in physics, in the concept that this is not the rate dependent variable. You don't actually care about time. You care about scale. So I would argue that you should plot everything that you do as a function of your efforts, and your efforts can be measured in dollars. And so your dollars are how much money have you spent to actually deliver what you're trying to the market. It could be engineering headcount. It could be anything of that sort. What's the efficiency with which you're acquiring customers over time? And so when you do this, you can say definitively this company has generated 2.2x the amount that it spent over the $2 million that it spent. Again, this goes back to understanding the financial concepts. As a capital allocator, how do you get the best price for your efforts? And then you can measure this for companies over time. So this is the example I showed you of the company that was scaling linearly, spending millions of dollars a month. This is what their customer acquisition funnel looks like over time. So they've spent about $50 million. They've generated a 3.1x return on those dollars over time, consistently. The black line shows the marginal LTV to CAC fluctuating from period to period. And you can see that it's very volatile. It fluctuates from 2 to 3 to 4. The gray line is the cumulative results of those efforts. So regardless of what's happening from period to period, you care about the cumulative result over time. And so this is how, if you're a founder, I would argue you should measure your marketers. You should measure the efforts of all your growth. You can also apply this to CAC. So you can think about CAC changing from period to period. It's much different to look at how your CAC changed after $1 million of spend versus $10 million of spend. If you think about everything in terms of plotting it over months, you'll miss this nuance. But if you plot it relative to the amount you've spent, you can see exactly how this behaves. And so we like to think about what's going on here. You can start to see things like this outlier at the end, what's happening. And when you break that down into all the channels that you're spending on, this is a specific company that's spending across 6 different channels. You can see exactly how the returns are distributed across every channel. And the way to think about this is when you buy a YouTube ad, you're buying a bond. That bond will generate some users who will pay you money over time, just like a coupon that a bond will generate over time. And so is YouTube at $446 a good value? That's a question you have to ask yourself. These bonds have different level of depth too. A junk bond may not have a lot of depth, like an affiliate channel, but it may have a very attractive price. So you're taking some risk reward there. Great, so with those tips, I wanted to give you a little insight on how we think about scaling. Hopefully you too can be like Buffett, and happy to answer any questions.
Okay. Well done. Microphone's right here if anybody has any questions. I see somebody running to the microphone, maybe? Okay. Take your time, we're good. All right.
Yeah, g'day. Awesome presentation, head spinning. Dean's my name. First of all, is there like an online course where people can go and learn all that shit better? Because that was awesome. I'm hoping Social Capital has some resources, maybe, or you can share those slides. Secondly,
actually, we're going to share all the slides in an email after the event. We'll just link to all the decks, so you don't have to.
Awesome.
We'll always do that. Yeah.
So the question was, in order to collect that data, do you have a bunch of tool sets you recommend? You know, like Segment, Mixpanel. Is there kind of a standard?
Great. What tools do you use?
Yep. Yeah. We invested in mParticle, so we're biased. No Segment, but Segment works too. Google Analytics is good enough for a lot of this, and just any open source database will do. A lot of these are just queries that we run to figure out how users have engaged over time.
Okay, another question. Your name and a concise question for Andy Arts.
My name is Ben. I have a similar question, which is, how do you recommend keeping these up to date? What's the frequency that you recommend that we update these reports? What kind of granularity do investors expect to see in terms of weekly, monthly, quarterly, et cetera?
Sure, yeah. So when we're working closely with companies, we have what we call a one-pager, which is 10 pages, and it's a bunch of graphs that someone's spending 4 to 6 hours on a Thursday to prepare for the Friday meeting. So it's quite intensive. These are usually Series A companies with 20 to 30 folks. The investor updates tend to be monthly to every 6 weeks. We operate a bit differently because we're in the Slack channels, we're in the weekly meetings, we see all the data, we have access to the database. But I would imagine at your board meeting, at a minimum, you would want these to be refreshed and updated. The ones that matter and where there's outliers, the truth is a lot of these don't change, and you don't, that graph where there was 11 months of wandering around, not seeing anything, we'll report on it, but it's not really meaningful. So the thing is to be intelligent about where the actual changes are and curating that and directing people's attention to that.
Great. We'll take another question.
Hi, Paul. A lot of those were B2C. Is there any difference with B2B and enterprise sales, and how would you get the data sets for them?
Yeah, actually, they're both B2C and B2B. So we try to think about every company like a black box. If you're a B2B SaaS company, you're doing some effort to acquire customers. It may be a salesperson who has some metric that they're being measured against, and if they're an SDR, they'll probably be automated eventually. So all these things you can measure and just compare side by side. So B2C, B2B business doesn't matter to us from a data perspective.
Great. And we have time for one more question if somebody has it. If not, let's thank Andy Artz. Well done.
Thanks, everyone.
Okay. Selling. Super important. Whitney Sales. It's literally her name. And she didn't change it. Whitney, did you change her name? It's legitimately Sales. And she's good at that. And she's going to talk about optimizing your sales pipeline. So let's give a warm Launch Festival Sydney welcome to Whitney Sales.
Hi, everyone. So as Jason mentioned, my name is Whitney Sales, born and raised. Let's get that out of the way. What we're going to talk about today is actually how you run a sales conversation. So, there we go. So I work with Acceleprise Ventures. We're a B2B SaaS accelerator. Before that, I actually ran my own startup sales consultancy, working directly with founders and their go-to-market. So I developed a process called the sales method, which is basically the tactical advice on how to actually take your company to market. Before that, I worked with several B2B SaaS organizations, 4 of which were on the Inc. 5000 fastest growing companies list. I've been through 4 acquisitions, 1 IPO, so rapid growth is my wheelhouse, specifically in B2B SaaS. So if there's one thing I want you to get out of this presentation today, it's that your customers will tell you everything you need to know in order to sell to them. It's just about asking the right questions. And there's a whole sequence and process to doing this. And there is an art and science of selling. The art is how you actually do your selling yourself. So what is your personality you bring to the table? And what we're going to do is actually talk about the science of it. So what's the process of this? And again, it's a focus on your customer. So if we look at the overall structure of a sales conversation, this is the way I like to look at it. It starts with context, which is humanity around who you are and as a person, so start with a laugh. I always start with my last name is Sales because it's a great way to break the ice. Then you go into introductions. So who's in the room? Then we talk a little bit about the agenda, so structure of the conversation or meeting that you're having. Then we're going to jump into founder story, which is going to be your initial pitch or use case you're going to have for the customer. And then your qualifying questions to understand if the customer is a great fit. Then jump into the what of the business, so what is it that you're actually going to do for the particular customer, and the ROI that you can actually show them. And then how does this customer actually buy? So jumping into laughter. So a lot of people will just jump straight into a business conversation, when in reality, starting with something that actually establishes the fact that you're a human too, you're just trying to solve a problem. So I will find any way to get the other person to laugh. From what I did that weekend in a funny story about me, something I found out about their business, the fact that I'm wired on coffee and talk too fast, because I'm a fast talker, as you guys can tell. Anything. And especially self-deprecation is a really great way, especially as a salesperson, because people always think salespeople are cocky, and it's a great way just to break the ice. Then jump into introductions, roles. So who is actually in the room? What is your role in the organization, and what role do you play? And then who is the other person on the other side of the table? If there's a group of people, this is especially important because responsibilities of each person can differ from title to title. And if you look at how the conversation goes, If you have a lower level person who's actually driving the conversation, or multiple lower level people who are driving the conversation, it may mean that the dynamic in the room is that it's a consensus-based decision-made organization. If there's a higher level person driving the conversation throughout your conversation with the customer, it could be that it's a top-down decision-making organization. So this can be really important to pay attention to. And then finally close with how much time you actually have for the call, because sometimes people switch it up when you get into the meeting. You may schedule more time than they thought. Next, go into agenda. This is setting expectations. This is really important when you're dealing with larger organizations, because they will actually want to know that you're going to not waste their time, and they want to know goals of the conversation. So I'll start by asking them what their goals and what each person's goal is for the conversation. This can be really important, again, if you're dealing with a team cell, because each person has different goals. And if you have someone who is checking out or not paying attention, you can actually bring them back into the conversation by tying it back to the goal that they had at the beginning of the conversation. From there, I'll jump into what my goals for the call are, or my meeting. This is going to actually provide you with the structure. A lot of people, when you jump right into questions, if there's not expectations that you're going to start with questions, they'll feel a little confronted by the fact that you're doing that. So if you let them know your goal at the beginning of it is just to find out more about their business, it gives you context to actually ask the questions you need to ask and find out more about their organization. From there, once I get an understanding about what their goals are, I'm going to tell them that I'm potentially going to discuss what I'm going to potentially help them with, if there's a fit. And then outline next steps. And I always start with that being an if versus assuming that it's going to be a good fit, because it lets the customer know that I'm prioritizing their needs versus my own. And then finally, I close with structure for asking questions. So a lot of the time, people can carry about 7 threads of thought in their head at a given period of time. If you don't give them how to actually ask questions throughout the call, they can get distracted and they won't actually engage in the conversation. And so you need to let them know, is this going to be a presentation where questions are going to be at the end, like today? Or is it going to be, I want someone to interrupt me. I want this to be a discussion versus a pitch. So providing that context to them can be really, really helpful in the sales conversation. Okay, so your pitch, a lot of people actually talk about what their product does. In reality, it's much better to give your pitch of your product through your founding story. So how did you come across this discovery? What were you doing beforehand? In that case, you're establishing the credibility for why you're the best person to solve this problem. What was the discovery you actually made about the business? So what is the problem that you realized? And then how did you go about approaching and finding out how to solve that problem, and the way that it's the best way to solve that particular problem? And then the context around that. So there's always trends that you discovered around how data was procured, or how a problem was particularly solved, or a gap. Everything was managed in an Excel spreadsheet, and realizing a lot of inefficiencies. So you need to talk about how the trends in the market have changed and what you discovered around that. And then and you need to make it relatable to the particular customer you're talking to. So if you're talking to someone that's a strategic API that's going to be plugging into their overall business, the application of that is going to be different if you're talking to someone who they're going to be using the product on a day-to-day. And then finally, after you give your pitch, pause for questions. There's almost always going to be questions that come up after a pitch, because people want to understand more about what it is that your product does. Okay, so your qualifying questions. I structure qualifying questions in value-based questions and value-based responses. In your qualifying questions, you get 2 to 3. And they're going to be the questions around, is this a good customer for me? So what is it that you actually need to know about this particular customer's business to know if they're a fit for your product? And on top of that, looking at what are the use cases that actually apply to your to this particular customer that you're talking to. Even if you don't have use cases, you can talk about your beta customers, or you can use some of the customer discovery that you actually had when you were learning about the customer, or when you were learning about the product that you were solving. And then the value-based responses, this is actually a key element when you're looking at selling to a customer. Most people, they'll just collect information and won't actually respond to the customer. The value-based responses are the context that you're going to give to frame how the customer should actually be thinking about the problem. So we talked a little bit about trends that you discovered in the market. So for example, one of the companies that I worked with is called People Data Labs. They collected people data and plugged into various various platforms. So they plug into your applicant tracking system, your marketing automation system, your CRM to keep the people data up to date. One of the trends that they actually discovered was that 90% of the data today has actually been collected in the last 6 years. And most of these platforms that were built 15 years ago. So the application of having the platform that were built, they were actually missing the data sets that these customers actually needed. And so if they plugged into them and kept them up to date, you had a better application for the customer in the modern day. From here, you're going to jump into use case. So if you notice in this entire conversation and the qualifying call, your first call to establish context for the customer, I never once show the product. I'm demonstrating the applicability and proof that we can do what we say we can do through a customer use case. So it should tell an ROI story. And I have a script for this that Launch actually has, so if you guys want it, I can send it to you afterwards. But basically the structure of it is, when I worked with someone like them, a VP, a C-level exec, an organization, they had this problem too. This is how it applied to their business and the problem they were actually having. And we implemented our product, feature whatever. The benefit of it was XYZ, and here's how it actually impacted their business from an ROI perspective. So it's a really simple script that you can look at and how you talk about your individual customers from a beta and a use case perspective. So again, you don't actually have to have full customers when you talk about use cases. You can find out a lot in your customer discovery that can be your individual use case. And people ask about them being a customer. It's someone we talked to, did a pilot with, or we learned in our customer discovery. So for early stage companies that don't actually have core customers yet, you can prove it based off of other data. Okay, so selling is actually contextualizing the value for that particular customer. So when you look at this, what do you need to know about the customer to tell their particular ROI story? So we talked about the use case for a customer, right? So for one of your existing customers, what data do you need to know to give that same story for them? So is it something around the type of technology they're using internally? It's usually numbers, or how much time it takes, or how much pain they have. How big is the team that addresses a particular problem? Then in these value-based responses, this is where you use a tactic called spin selling. So instead of educating the customer around the problem, what you're actually doing is empathizing with the customer around the problem. So that's actually something we hear from customers a lot. And in the empathy piece, you can actually use this to overcome objections as well. So you can talk about how, for example, if someone you know your customer is going to have an example or an objection around how a product can be used or how it can get implemented, or that they already have a team that solves this problem, you can use your value-based response and empathizing with the customer and an existing customer you had. That's something we hear a lot. This is how we address that with another company. So it allows you to overcome the objection, again, based on a use case and story, while educating the customer at the same time and understanding that. So in your ROI, so these are going to be you're going to identify the KPIs and story that you're going to tell for this particular customer. And remember that everyone who's in the conversation has to justify the value of your product to the organization that's going to be purchasing it. So the best way you can help them do that is help them calculate their own ROI in the conversation. And everyone might have, or large organizations typically need a 10, 20x ROI. So how do you help them calculate this? And there's going to be different metrics that you can look at and how the organization actually measures return. So you can dive into this in the selling portion of it, so you can actually then go tell their ROI story for them internally. Okay, now BANT. Everyone knows BANT if you've done selling before. It's budget, authority, needs, and timeline. With looking at BANT, there's a lot of different strategies as well. People talk about CHAMP. I use BANT when I'm actually teaching people because it's the basics and everyone generally knows it. Budget looks at, when you're looking at budget, some of the questions I ask is, how do you typically evaluate tools as an organization? Is this something that you have the resources allocated for? In budget, you also want to look at technical budget. So if someone has to implement your tool within their organization, they may have a 4-month sprint or a 3-month sprint or a 2-week sprint. How do they allocate that, and how do they determine how they're going to spend their resources on your tool? And this can actually impact your timeline quite a bit as well. Authority, so one of the things I run into a lot with people when they're selling within an organization is there's multiple people involved in the decision-making process, or they're starting too low level when they actually get into the organization. So one of the ways to get past this in a qualifying conversation is to ask them, is there anyone else who would need to be involved in the decision-making process? So it's not, are you the decision maker? It's, who else would need to be involved? And there's always someone else who's going to need to be involved. Even if it's a CEO, they're going to need to involve their team to implement the technology. Needs, these should have already been established at the beginning of the conversation. So you're looking at, in your qualifying questions, you understood how you impact their business. And when you actually design their use case, you understand what their needs are when you're selling it and give the ROI. So that's the need piece. And then timeline. Have they ever purchased a tool like this before? What was the process like? And did they have a legal process? Is there someone else who needs to approve security checks? Do you need to get an NDA in place before you deal before you get in a conversation with the stakeholders and have a stakeholder meeting? All these things are really important to actually map the closing process and your initial conversation. Because this specific call is actually helping you understand the context and the foundation of how you move forward within the company. And then finally, next steps. So confirm and schedule the next steps. So what's going to happen when you get off the call? So when you're going through BANT, you're actually mapping what that process is going to look like throughout the organization. So you know very clearly when you get off the call, if there's a fit, who are you going to talk to? Who are they going to talk to internally? When is that next meeting? What's going to happen in that meeting? And then when are you going to schedule your next call? From there, you're going to look at what's their homework and what's your homework. If you don't have homework for them, come up with it. I mean it. It's really important. Specifically because when you're selling it to a larger enterprise, incremental asks that company actually delivers upon are small steps closer to the larger deal. And their follow-through on those tells you how bought in they are. So it's really, really important to have homework for your customer. It could be finding out numbers. It could be getting you an NDA. It could be getting the people that need to be involved in the decision-making process involved. And then finally, always schedule your next step. Don't get off the call or out of the meeting without scheduling it. If you're actively selling as a founder and you're realizing that your process is slowing down, I can almost guarantee it's because you're not scheduling the next step on the call. And even if they won't schedule it with you, get a tentative time. And then what the agenda looks like. So if there's multiple people that are actually going to be on the next call, what do they care about? What do you guys need to make sure you cover? So that you're setting yourself up for success, and the person who's actually bringing you into the stakeholder meeting, bringing you into the organization, actually gives you the details on how to make sure that they're successful and you're successful. I guess my last slide's not there. Anyway, so this is the general structure of a qualifying call, and so we can open it up for questions now.
Okay, questions. I see people going towards the microphone with some questions. What's the biggest mistake people building their first-time sales team make?
Building a sales team specifically?
Yeah. And a sales culture,
Yeah, the biggest problems I see when someone's building out their team is they'll hire, founders specifically won't be doing the selling themselves, and they won't understand the needs of the salesperson when they bring them in. Each organization will have its own skill sets that are required. So if you're selling to Fortune 100s, the salesperson's DNA is very different from selling to an SMB. And so you need to understand the DNA of that person and what's actually going to be required of them. That's why it's really important to do founder selling first.
What's the most annoying technique that's being overexploited in sales, now? Because we have this whole sales best practices sort of culture and people sharing and writing Medium posts and tools being made.
Yep.
What's the most ineffective and or annoying thing being done right now that makes you either hate the sales industry or just smack your palm onto your forehead and go, no?
I guess the biggest thing is the culture that you see around selling today. So sales itself is really, in its DNA and its core, is problem solving and project management, basically. And so people think of selling and they think of the typical like Glengarry, Glen Ross, or used car salesman. There's a really great book by Daniel Pink on this, on To Sell as Human. Selling is part of every single person that has human interactions on a day-to-day basis. So you're selling when you're talking to your VCs, you're selling when you're hiring employees, you're selling when you decide to pivot within the organization and need to convince your employees that it's time to pivot. It's not necessarily a transactional conversation. And so when people think, my biggest problem with sales is people think of sales in this really negative context as deceitful, when really the basis of selling is trust and problem solving for the people on the other side of the table. So that's probably my biggest problem around it.
Your name and a concise question, go.
Hi, my name is Michael, and the founder of Credit Scoring is an API business here in Australia. I have a question regarding how you would answer a particular question I always get. It's more relating to when I pitch the company, they often assess whether they want to build this thing in-house or buy it from someone.
Yep.
Is there a strategy used to answer those kind of questions?
Yes. So when you're dealing with that, you're looking at the mentality of your buyer. So if you've looked at the law of diffusion of innovation, there are specific mindsets of buyers. You're dealing with an innovator. So there's innovators, early adopters, early majority, late majority, and laggards. I suggest everyone look it up if you guys aren't familiar with the law of diffusion of innovation.
What you need to know is there's people who adopt technology
Yes.
early.
Yep.
There's everybody else.
Yes.
And then there's people who are really fucking slow.
Yeah, exactly.
Basically. So there's the people in this room.
Yes.
There's the people who we're friends with. And then there's the people who call us for tech support.
Thank you, Jason. So what you're dealing with is someone who's an early adopter. And so in that, when you're talking to that customer, you need to understand the buy versus build mentality is what is the cost to actually develop. So first you need to ask yourself, is your product a feature or actually a platform? Because if it's a feature, a lot of the times it won't make sense for the buyer. If it's a platform play and actually fits in a larger part of the business, the way you address it is start looking at the other areas that it can potentially expand into. It's selling the vision of where the product's actually going long term and how it will impact the business, and then looking at their internal resources and their internal resources' ability to actually execute on building that. Because if they don't have the resources to build it, you can look at how long it's going to take them, and it just doesn't make sense, especially for enterprise organizations. It's insane how long it'll take them to just like put in a little nugget.
Another, and dangerously close to the grown, so be careful there. Your name and your concise question.
Hi, I'm Rachel. So my question is there a difference in approach that you need to take if they are your first customer? So you're asking them to take a leap of faith in a venture that's unknown.
Yes, 100%. So when you're dealing with your first customers, usually around your first 10 customers, they're partners more than anything, more than customers. And so you need to take the approach of looking at them, are they a good customer for you? Because each of your initial customers is a spoke of your next group of customers. So Paul Graham has a really great quote that it only takes 10 customers to get to 100. And it's because you get to replicate each of the use cases for your existing customer base. So your first customers, take care of them and hold their hand and make sure they stay with you, because every VC is going to be looking at your churn. And that customer will help you push your value in the market if it's a great customer for you. There'll be references, et cetera. So again, they're a partner versus a customer is really how to approach it.
Okay, let's give it up for the one and only Whitney Sales. Crushed it again. Wow, 2 great talks. Okay, now is the time that you all love so much. The time when I savage startups who take the time to present their vision to us, and I give them that candid feedback. I'm kidding. We're gonna be super kind and gentle and give great feedback. Mike, why don't you join me? Come on up. I'll get a little help this time. Can I get an extra microphone? Thanks. Mike Savino is one of our venture partners, so I rely on him out of New York to help me with deal flow. And speaking of selling, and speaking of partners who take that leap of faith in something that is unknown, I want to thank KPMG Enterprise High Growth Ventures right now. Let's give them a big round of applause for taking a leap of faith on the Launch Festival Sydney. All right, Mikey. We're going to give him What did we tell him? Brian Alvey? How many, what did we tell him? We told him 2 minutes? Great. 60 seconds, so we'll give them 40. Okay. Got to keep them on their toes. So you got a minute. Clack those clackers really good, and then I'll give you 4 minutes of feedback. So pitch me on what your company does, and Mike, and what you're struggling with. Tell us your name.
Hi, my name is Marcos Mogollon, the founder of Solvastic.
Okay, you have 60 seconds. 3, 2, go.
Okay, at any given moment, someone somewhere is having a great idea about a new product or service, but they're not willing or able to execute it. On the other hand, we have companies who are struggling to innovate, but they're not. But they're relying on their.
Okay, stop. This is incredibly boring, and you're trying to remember your speech. Yeah. Pretend we're having coffee. You ready?
Yeah.
What do you do? I'm Jason.
Hi, Jason.
Use the microphone. I know we don't use the microphones over a flat white, but come on. Play the game with me here. What do you do?
Hi, Jason. My company detects...
Stop. You're still reading the script. We're having coffee. Hey, a friend. Okay. Giuseppe introduced us. Bada bing, bada boom. We're having the flat white. So what do you do? Talk to me like a human. Forget about these people. Human.
Okay.
What do you do?
We find great ideas and bring them to companies that are willing to execute them.
Great. So you have an idea marketplace that you bring to companies or something?
Yes.
How do you make money?
I make money in 3 ways.
Use the microphone.
I make money in 3 ways. The first one would be sponsoring contests to help companies to find...
Keep using the microphone because you're using the microphone like a pointer, and that means we can hear
All right. Sponsoring contests, so companies can...
Sponsored. Great. What's the second way?
The second one is licensing in and out.
The third way?
The third one would be promoting the creation of startups.
What's your question for me? What are you struggling with, kid?
What would be the best way of selling this to investors?
Great. Okay. So now we've saved him from his terrible script. Remember yesterday I said, never, ever read from a script. You an actor?
No.
We know.
They actually volunteer for this, right?
Volunteer. I told you it's going to be candid, it's going to be honest. He signed up for it. So anyway, we see this a lot. It's just a standard mistake in pitching. But Mike, when you hear this idea of a marketplace of ideas that you're trying to do as a contest or maybe sell into corporations, what is your initial reaction? Have you heard this idea before?
I haven't heard the idea before, but where do the ideas come from?
Yeah, exactly. From consumers or people.
Yeah.
And we saw it a little bit in Ballooner yesterday. Well, no, don't worry about that.
He's got the answer.
We'll talk to you in a second. We're talking as investors. You saw it in Ballooner yesterday.
It's hard to come up with ideas, right?
What's that?
It's kind of hard to come up with ideas.
You know, it's pretty easy. Everybody's got them. So I have seen this 2 or 3 times. Number one, I had a company called Challenge Post that would post challenges. Sometimes, and they would do it for developers. We saw Ballooner yesterday in the Republic competition. They let people inside companies anonymously give their ideas of how to solve problems or add features. So there is something around ideas that is kind of fun and important. However, it's just hasn't been proven to be a great business overall. And I think if you're going to get investors with this idea, because people don't believe ideas have much value, you're going to need to prove it with enterprise software or a couple of customers. Do you have any customers yet?
No.
Great. So then you're not going to get investment because the idea is kind of wacky and out there. And you have to prove it to them. You cannot expect with an idea that's so simple and basic that they're going to give you money to then go execute it unless it's your uncle or aunt and they like you and whatever. This is an idea that's so easy to build with a Typeform or a SurveyMonkey or a Google Doc. Just go prove it without anybody's money. You're putting the cart before the horse. If you came and said, I work at Qantas, and Qantas has a problem. They are perceived as being much more expensive and people are trying to save money. We came up with an idea for how they could save money or whatever it is, and we solved that problem for them. They had this marketing problem of communicating that they now had cheaper flights, but they didn't want to come across as cheap. And we put out this marketing campaign. I sent it to my friends, and I also paid to target people in San Francisco, Los Angeles, and Sydney, which are the cities that people travel the most, and boom, we got these 8 ideas. We voted on them, and they said this marketing idea was the best, and they didn't have to hire a copy editor to write it, and then they paid that person with a first-class round-trip ticket. Boom. And you wouldn't need anybody to do that. So when I see a founder like this who's waiting for permission, waiting for money to then execute on the idea, I put them in the bucket of weak founder. Now, you may be the greatest founder ever, but because you're waiting for permission to do something so simple and not collect the data, you're just going to get this, you're going to send a negative signal to investors. You have anything less to add?
Well, I think every investor in the back of their mind is thinking barrier to entry, right? You're always thinking of, if he builds this, what moat can he create to prevent other people from jumping into it? And what you alluded to before was that there's not much of a moat in the beginning. So you'd want to hear what that moat could be in his mind to prevent other people from coming in behind.
All right, good job. Let's give him a big round of applause. Next up, let's pass the microphone. And I'm just going to give a quick microphone clinic as they come up. This is the proper way to talk into a microphone. You hear yourself. This is not.
Thank you, Jason.
Do it. Okay, 60 seconds. Wait, you bring your friend?
Yeah.
Go ahead, you're doing.
Hello, my name is Sai, and my co-founder Oma.
Got it.
Yeah.
3, 2, go.
Who makes most inventions? You may think scientists or engineers. In fact, most inventions come from everyday people like drivers, plumbers, and nurses. In 2016-17 financial year, Australia spent 1.2 billion in innovation.
Stop. This is incredibly boring and you're reading a script. Tell me what you do and what your struggle is. Forget about them. Talk to me.
Yeah, we build a product from idea to manufacturing.
Which idea?
Any physical product ideas.
Okay, so you have a factory and you help people build stuff?
No, we have a platform to connect all the factories, industrial designers, manufacturers.
Got
and
it. I had an investment in a company like this. And so you help people design their product and pick a factory and manage that process for them.
That's correct.
What's your question? What are you struggling with?
Including IP as well.
And the IP, like patents.
Patents,
Great. You're an attorney? I'm joking.
No, I'm a product designer.
What's your question? What are you struggling with?
How do we make this platform scale in terms of...
How do you make factories scale?
No, like how do we... So we've got like customers that want to come on board, but then how do we take them through the funnel to make it scale? Because we've got all these ideas, but then we're doing a lot of work ourselves. And
Well, are you trying to come up with the ideas, or your idea to help people who have ideas on Kickstarter?
Help people have ideas, yeah.
Yeah. Well, where do those people typically post their ideas? And
they send them to us at the moment.
Yeah. How do you get those customers?
We're speaking to them in person at the moment.
Yeah, but how do you find them? How do they find you?
Just like meetups and networking and referrals and things like that. Yeah.
So you go to events and you find people who want to build stuff in factories, and then you go build it. So the question is, how do you do more of that?
Yeah. Sure. Yeah. Globally. So like
Globally, yeah. So what I would do is, there's something called content marketing, which is there are a huge list of questions that everybody asks you in your business, right? How do I do this? How do I pick a factory? How do I make sure that factories are not abusing their employees? How do I get stuff delivered? What's the cost? You basically write blog posts about every single one of those. You make videos about every single one of those, and then you go onto Quora and you answer every single one of those with the same name and the name of your company, and then you do a massive SEO push to get everybody there. So instead of just answering questions one-off, which doesn't scale, to your point about scaling, video,
exactly the problem.
everybody goes to YouTube to find answers, and everybody goes to Quora to find answers, and everybody searches Google, which means basically going to blog posts or Quora. So I would use those, and I would also use LinkedIn, where you can @mention other people. This all falls under the rubric of content marketing, and if you can master that, great. If you can't, you got to hire somebody who's a great writer and who is great presenting on video, which you may or may not be.
Right.
Based on today, probably not.
That's true.
It's not personal.
It's just
you
true.
just want to get somebody who can actually answer these questions
Yeah.
really well. You may be the best writer in the world, but not a great on video. You may be great on video, but not a great writer. Mike, what are your thoughts about scaling?
So, we've spoken about this many times. Building hardware is extremely difficult. So I can see this being attractive to a lot of people in the prototype phase.
Yeah.
But once they reach scale, they're going to want to move away from you to build it on their own, just because it'll be cheaper and they'll need to get their cost of goods sold down and increase their margins. So you have to think about a way to protect yourself once you get past that early stage with that potential, customer that you have from, them leaving. What'll be your value proposition, on day 2?
Yeah. And you make money through charging people by the hour for your services, is that right?
Yeah.
Use the microphone.
Plus the equity.
Oh, you get a little equity piece?
Yeah.
Perfect. Yeah. So that's a great
good
way.
answer.
It's a great answer to blend it. So you can tell people it's $50,000 to hire us as consultants for this project, but we'll take $40,000 plus $20,000 in equity. So whatever the equity piece is, ask for 2x that, since you're not getting cash, and say we'd like $20,000 in equity at whatever your last round or next round of financing is, plus the $40,000. Let's give them a big round of applause.
Thank you, Jason.
You're welcome. Thank you. Okay. All right. Tell us your name.
Hi, I'm Sarah Cummings from TED Goes to Hospital.
3, 2, go.
Can you imagine being 5 years old and going to hospital for the first time? You've been told that you can't eat. You're surrounded by big people in masks and machines that go beep. Can you imagine how scared you'd be? Now imagine you're the parent of that child. I don't need to imagine, I was the parent of that child. And so along with my co-founder Sarah, we developed an app called TED Goes to Hospital. It lets children travel in a game through the experience they're going to go through so that they can be prepared. We're working with the Children's Hospital at Westmead, and we know that if children are less anxious, they recover better and that they tend to comply more with their ongoing treatment. Our target market are parents, but also the private hospitals and the health insurers that benefit from this through efficiency gains. And at the moment, we're raising capital to get our prototype to market and also looking for advisors and a CTO.
Okay, great. Well done.
Good job.
Concise pitch. And I think for those of us with kids, we know what it's like to take them to the dentist or take them to the doctor. My oldest daughter is deadly afraid of shots. So a video game where she could play on her iPad, I'm assuming? Or,
yes.
A game where she gives shots to other kids or she learns how a shot works and why she's getting them. This would be actually, I mean, you laugh, but I mean, if she could actually give the shots, then that would take it away, right? Because you would habituate and...
That's right. It's based on, there's research-based play therapy that's used in all the children's hospital, where if you are able to do it to a toy, you get more comfortable, and they also talk through the toy. So rather than saying, I'm worried about X, Y, Z, Ted's very concerned about this.
Right. They use toys in therapy for the child to role play with, essentially.
Exactly.
And it's a very effective technique. How do you make money?
We make money by selling it to the parents, but our main way that we're looking at making money is getting the private hospitals and the health insurers, pathology providers to actually provide it to their customers.
Yeah, so this, I would put this under, wow, this is a clever idea that's very personal to you, and you're pulling the string on this idea and seeing where it leads you. Now, it may lead you to a place where there's not a big pot of gold and there's not a lot of money in it. That's possible. And so what you can learn along the way about this is important, because what you're trying to do, and what I thought was the most interesting part, is forgetting the specific use case, reducing the anxiety of the child.
Exactly.
This does not just apply to the shot or the dentist. This could apply to the first day of school. This could apply to divorce. This could apply to getting in a fight with a friend, or any number of things that children have anxiety about. So I would step back from this and say, wait a second, maybe if you open the aperture up, maybe a startup that helped children deal with challenging moments in their life would give you the ability to charge a $10 subscription, and parents would never unsubscribe from it if it told them stories that reduced anxiety. Because there are many books that handle this on a one-off basis, like, you know, Susie Goes to the Dentist, Bobby, you know, is the...
I have a collection at home.
Yeah, we all have them. But if it was like an overarching one where I just knew, like, I could pick from it, like, different scenarios where they could gain empathy and confidence, I would pay for that on a subscription basis. What are your thoughts, Mike? Is it clever? There's something here.
Yeah, I like the way you brought it up to a greater level. I think that's what I was going to say. A number of years ago, we saw a startup that tried to do this around children with diabetes through a kind of a stuffed animal and some other tasks. So I think you need a few different levels of expertise in your company. There's a few disciplines, but I think there's some legs there and something successful that can happen.
One of the nice things about it too is this is not the type of startup where you need to like raise a ton of money. You can do small experiments and maybe build up a small fan base for these. One thing you could do is you could literally make a YouTube video about your story of going to the dentist and how dentists work, and just use stock images. And it might cost you $1,000 or $500 to make that video, and then you release that video as a test on YouTube. And just see, you know, taking your child to the dentist for the first time, getting a haircut for the first time. It could be for the first time series, like my first...
Ted's first time.
Oh, is there one?
That's a whole different story.
I'm not sure what that is, but okay.
Yeah, no. Ted does all sorts of weird and wonderful things in our stress management. We do already have an ebook, so one of my questions was whether we actually release the ebook as a test or if We're better
Well,
off
here's the thing about
waiting.
ebooks. How many people have bought an ebook this week? How many people watched a YouTube video this week? All right. How many people opened Instagram in the last 48 hours? How many people opened an ebook in the last 48 hours? Okay, I think I made my point.
Thank you.
Go where the users are, and literally, I've been thinking about an idea, because you know, like these Marvel comic books have gotten pretty popular with the movies. You guys get the Avengers down here and this Marvel stuff? You do? Okay, I'm going to keep that dad joke going until you stop laughing. So you just groaned. So I was thinking, God, Instagram is so popular. I want to back a comic book company that makes original IP and releases it only as Instagram stories and Instagram videos, and then every day you just get a new cell in the comic book, as it were. And maybe you could build the next Iron Man or Hulk through that kind of thing. I think if you made something like this, where it's just every day a parent gets something on Instagram, it could spread like wildfire. Just little thoughts on it. So for you, I think, forget about the business model for a second and just get that feedback from parents and maybe see if you can figure out a brand. But it's a wonderful idea, and I think it's got potential. Mike, any last thoughts?
Yeah, I like it as well, but I do think, as you're mentioning, that anxiety isn't a one-time event, and something that's more interactive than just an ebook would be better.
Okay, let's give her a
Thank
huge
you very
round
much.
of applause.
Thank you.
Well done.
Great job.
I like it. I like it. Watch your head coming up. Okay. Remember how to use the microphone. You talk directly into it. Okay, don't. Whoa, you're not going for the hug, are you? All right, give me the fist bump. Give me the fist bump. Oh, yeah. All right, we'll see how it goes. Maybe you get the hug if it's a great idea. All right, 3, 2, go.
Hi, my name is Jess. I'm building a platform called Seat.io. It is meetup.com for local mini conferences. Local tech communities around the world in cities are hosting more and more of these free, recurring, highly structured events. However, the existing tooling does not exist to support the organizers for these. It's often a frustrating and time-consuming task to get these events up and running. Seat.io plans to own this new emerging space by building the tooling required for speaker management, sponsorship management, and event management. We plan to, we have a $45 million TAM here in Australia. I'll get into the business model a little bit more during the questions. We plan to launch in the coming months to our first 94 early adopter subscribers.
Okay, big round of applause. What's your question? What's your challenge?
So the first
or is it just a plug?
A plug and questions. The first challenge is taking on the incumbents in the space. So Meetup.com and Eventbrite have very similar offerings. Our plan is to first supplement, kind of.
Okay, without promoting, what is your question?
So
you don't have a question? It's a great idea. I think it's awesome.
Thank you. Does it make sense to differentiate in the first place, or to work alongside and then eventually build a user base before trying to take on the incumbents?
Okay, so great question then. What I would do is I would start or buy through backdoor channels whatever the biggest meetup groups are. So somebody who starts that group basically has the keys to the kingdom, I believe. I would meet that person, I would talk to them, I'd say, listen, I'm not really allowed to buy your 600-person tech meetup. I'm wondering if I hired you as a consultant for $1,000 over the next 3 months, if you would teach me how to manage it for you and then transfer you yourself as the admin to me if I do a good enough job. Very subtle, right? And then you get that 600-person group. Then you tell that 600-person group, hey, we're having this next event. You have the next event. And then you say, hey, if you want to join the raffle, because Meetup, I'm friends with the founder of Meetup, Scott Heiferman. I've known him for 25 years, so I'm going to tell him what you're doing. I'm not going to rat you out. Don't worry. I won't eat cheese on you. But what I would do is, the reason we didn't use Meetup for our events, and he tried to pitch us on it, was we didn't get the email addresses. And I was like, I'm not going to be, have an intermediary between us and the people at the events. I want the email addresses. So then you'd have to try to convert those people at the events and get their emails. So what you do is you'd find their names, you'd go over to LinkedIn or AngelList or wherever. You'd use something like LeadIQ to go scrape their emails if possible. And then you would invite them to the list of your new service, let's just call it NewCo. You'd invite them to NewCo and you'd say, hey, we're doing a survey about who's going to be at the next event, and we're having a discussion about it over at NewCo in private if you want to join us. And you just slowly try to move them over. So it's not a bad idea to do that. But like the question, like the sort of question I had before about how many people were on Instagram in the last 40 hours, and everybody raised their hand, but nobody had an ebook. You may want to think about branding yourself on there for a year and do all the events on there, and then just figure out the one weakness is to Meetup. And I think it's that it's paid for the managers or something, maybe the only real one, so that's not for the users. And if you figure out one, like they don't have chat. Actually, I don't think they have chat.
Very limited.
Yeah, so if you think the chat room and the Slack room, build chat into yours and then move them over with that one feature, and then you can be very coy about it. Hey, I know they don't have chat over here. It's great for all this stuff, so we're going to keep it over here, but we happen to have a chat if you want to go. And come up with a direct domain name for the chat so that you don't have to worry about linking to it or whatever, that people can remember it. So if this was for, let's say, JavaScript, and you wanted to, or React, right, like, or Swift, whatever technically is. So it's Swift. You just call it swiftsydney.com, you know, and you say, hey, everybody, go to swiftsydney.com if you want to go to the chat room, and redirect that to your chat room, which is the deep URL to your platform. So it doesn't look like you're sucking people out of their platform, which is what Airbnb did, and then they finally got busted by Craigslist. Any general feedback for, yeah.
So I think the space is a little bit crowded. So I attend 4 to 6 conferences a year. I was at 2 in the last 2 months, sometimes as an attendee and sometimes as a presenter. And I feel like every conference I go to already has an app that allows me to connect with other members at the conference. So I would be concerned that you have a lot of competition and that some of the problems that you're listing are potentially already solved.
Yeah, it's something to think about. Okay, let's give him a big round of applause. Well done. Thank you very much. Sure. Okay, let's do another one. Pass the microphone. Watch your head there. And watch that top bun. Okay.
Hi, I'm Mike Quillin. And
right into the microphone, sir.
Hi, I'm Mike Quillin. I'm the founder of Wedgigo. 1.3 billion people participate in adventure tourism every year, and 600 million participate in outdoor activities. Most of them go into the wilderness completely unprepared, and it's a high-risk environment. We've developed a safety platform that is encouraging safe and responsible adventure travel, and we've opened up a marketplace for outdoor gear manufacturers and brands to connect with our audience. We believe that the long-term future for our protected areas is in maintaining a safe environment for outdoor participants, and we believe that our platform can help reinforce that with our users and help reduce some of the global impacts of mass tourism. We are currently in beta. We have 2 content partnerships who are willing to sign up, and we're in a seed round now looking to raise investment to grow our platform, scale our member base, and grow the team.
You have any questions, or you just want general feedback on an idea that we don't know what it is?
Okay, 2 questions. We're speaking to investors, and they are trying to convince us to go to a mass tourism audience to scale up and get high numbers of volume. But the outdoor community doesn't work like that. It's highly aspirational, and we believe the long-term value is in the long-term customer base.
So this is bad advice. You always want to have like a core constituent of people who you can reach. So even YouTube had, it seemed like it was just a platform for everybody. There was a specific group of people who really wanted to use it. Airbnb, same thing. When you have that, we call it a wedge strategy, or a beach you can land and then expand. So if you are going after adventure travelers, you know where to find them, and you know what keywords they search, and you know what blog posts and what content marketing to do, and what their profiles are like. So you can start with the adventure travelers, and then once you get that wedge in there, then open it up. So that might be what the investors are saying. But remember, investors don't have to run the business. They don't have the insights you have. You might be the person who understands that adventure travel will mean all travel soon, right? And that all people will want to do adventurous things, and that's where the world's going. Just like, you know, Calm.com understood that meditation was going to be, and mindfulness was going to be a huge mainstream thing 4 years ago when we invested. None of the other investors would invest. We took the leap of faith because we agreed with that thesis of, yes, this small number of practitioners of meditation, which was probably in the tens of thousands to low hundreds of thousands in the US, certainly under 1 million, would at some point become tens of millions. And we're well on the way to that journey. So I would discount that, and I would just over-service that initial demographic and learn for them. You're selling them equipment?
We're selling them a membership for a platform which gives them a trip planning application.
Okay, it's a trip planning application. I got you, yeah. So there's like, there's a great hiking app called All Trails in the United States, which is like $20 a month or something, and for like some premium features. So they were out there for a couple years, then they went premium, and I think it's doing pretty well. And even if you only hike once a month or once a quarter, it's kind of fun to do it. You need it even more than the people who hike 5 times a week because it tells you where the trailheads are, and gives you all this like interesting advice. So that's another example of like, hey, I don't know what meditation is. I'm not a diehard traveler. Those apps become the way that you become that. They become the onboarding to this secret world.
Yeah.
So that was bad advice you got. Mike, any general thoughts?
So maybe I was wrong, but I thought I heard something about safety certification for these different activities.
Not certification, but I've got a background in search and rescue and safety,
Right.
and we're trying to create a similar framework for encouraging safety for non-professionals.
I think it would be interesting if you built some type of an authoritative certification and in conjunction with insurance companies said, you know, I run a hiking company or a dive company, and if you ensure that all the people that are coming go through this kind of safety process, that their insurance rates get lowered. That's where I see something like this being really interesting.
Absolutely.
Yeah, and one of the things about safety is it's like a nice to have, but it's a lot of times people don't think about it. They're just like, yeah, I'm going to go on a dive trip. Fuck it, let's see what happens. And then like,
Most
you know,
people use just
then
a
all of a
waiver,
sudden
right?
they
Take a
you know,
selfie stick and fall
no,
off a
they
cliff.
come up onto the surface and nobody's there, and they're like, oh, I should have gotten that extra GPS locator, I guess, or put like a, and it's like, yeah, well, too late for that. You know, now you're the food.
Yeah, people rely just on a waiver too much nowadays. You know, instead of signing a waiver,
that's really interesting.
Certification.
Yeah, like I'm signing a waiver is like, yeah, this like, okay, I won't sue, but what about not having to sue as a concept? It's kind of interesting. I like that punch up. So there's something there. You always have to pursue what you know. If you are a search and rescue person who actually searched and rescued people, why do you care what a VC told you? Forget about what they told you. Follow your gut, what you know to be true, and then you prove to them that there's a market, and then they follow you. If you look at the VC community as just an ATM, you wouldn't walk up to an ATM and be like, what should I do? It's like,
Yeah, absolutely.
you like walk up to the ATM and you're like, give me my money, get the fuck out of the way. I got to go go on and do my rest of my day and do me. So I sometimes tell founders, like, don't overthink the ATM handing you money. Like, you could have taken it from any number of VCs, and they might have all different opinions, and you might ask them the same question 3 times and get 3 different answers from the same VC over 3 different weeks. They don't even remember what they told you. They're just talking for the sake of talking in some cases.
Yeah, sure.
You're the expert. Never forget that. You tell them what it's supposed to be. You trust your gut. If your gut tells you this is not a mainstream product, it's for this niche audience, capture that niche audience, make your business profitable, learn, and then you can open it up to the laggards that Whitney was talking about before. You get those early adopters, people will follow them. It's like the preppers in the States. We got like a big prepper movement, and now like these evangelical like nut bags are on TV, like telling you to buy plastic buckets of food and put them all over your house and put tablecloths over them because the end is coming. And so that whole thing got co-opted, and now it's becoming mainstream to be a prepper. I mean, Walking Dead also helped the zombie TV show. You guys get the Walking Dead? Okay. You got the zombies down here or no zombies? Zombies? Yeah, good. All right, let's give them a big round of applause.
Thanks for your time.
Good job. All right. One more? Okay, we'll do one more. Let's go. 3, 2, go.
Good morning, my
Lightning
name
round.
is Danny May from Lingmo International. We are a real-time language translation solutions company. We currently utilize IBM Watson. We're corporate partners of IBM.
Let me just stop you right now. This would be amazing if you did it in a watch. Keep going.
I gave you a watch.
I know. I'm fucking with you now.
I lost my train of thought now.
Sorry. Gotta roll with it, kid.
So I founded the company 5 years ago. On a trip I had in China, my passport was stolen, and I used a translation app, went up to a police officer and said, hello, how are you? And it came out, hello, I love you, to the police officer. So that's where the idea come from. Went and seen 40 angel investors. They all told me no, it was a stupid idea to do it because I didn't come from the tech background. And so I sold the house and just made the plunge and created, have my own dev team, and we created our own algorithms, machine learning to do translation in a different way. From that, we were on the radar of IBM, and now we're actually corporate partners of IBM.
All right, let's get through the IBM commercial and tell us about your product. Okay, nice job.
So
IBM is not an official sponsor.
Yeah. So we sell our solutions through B2B and B2C.
What is it?
Sorry?
What is the solution? What's the product?
So we sell language translation APIs to airlines, hotels to help them communicate with their customers.
Okay.
Our B2C is our devices, which is our smartwatch.
And what do I do? I just talk into the watch and say, I love you, and then it says, I lost my
love
passport?
you back. Yeah, that's it. So it's two-way translation. How
do you make money?
So we sell the devices,
Great.
for one.
What's your question for me?
Main question is, when you're a founder and CEO, when do you step out of the CEO role and bring a professional CEO in?
Great question. Mike, what are your thoughts?
Yeah, I think that's about self-awareness, right? You have to know what your strengths and weaknesses are. I don't think you always need to step out as much as you need to complement yourself on your next layer of management. If your background is kind of more evangelical and selling, you want some good operations people under you, like Jason, right? Gets good people. If you're not a detail person, you should get detail people. But I would say somewhere around maybe Series B, at that point, I think you should wait a while.
Yeah, I mean, a lot of times, there's not a CEO to be had, and I've seen a lot of people try to find a professional CEO to replace the person who had the passion and who told a police officer that they loved them and got put in jail for 10 days and, had all kinds of interesting experiences. Like, you have some passion for this and you sold your house for it. If I was an investor in your company, I'd be like, wait a second, you want to put a CEO in and that person is just a hired gun, and they don't care about this to the level you do. There's something called founder authority, which is why you want this to exist in the world. You want this to exist in the world because you want people to be able to navigate other places fluidly and seamlessly and build bridges between people. You have some deeper mission here, even if you couldn't really explain it perfectly today, and that's something you have to work on. What is the mission of this company? Why are we here? What's the purpose? To Ben's point before, like, what's that North Star burning light that everybody in the company knows about and the public knows about and the investors know about and anybody who sees the product knows, right? You have to have that. And that's your job as a CEO. You can't get another CEO to do that. Most of the times when a CEO gets placed, it's usually the beginning of the end in our experience. Like when the founder doesn't want to do it anymore, there's not enough room on the cap table to put a CEO in. They're not motivated. The company goes sideways. It winds up getting sold. And then you know what happens sometimes? Founder comes back and buys it. Founder comes back and they put them back in place and say, you know what? This person obviously was a hired gun and they didn't have the heart for it. So
yeah, usually they go kicking and screaming. Why are you asking this question? It's an odd question.
It's been brought to the table not by me, by investors and stuff like that.
Just stop them and say, hey, let's talk about what we need to accomplish next. And if I'm not capable of it, let's either teach me how to do it, and I'll learn, or let's find somebody who can come in here and do it. So if you're not good at the technical architecture of this, there's a person out there you can hire. If you're not good at sales, you can hire Whitney, and she can help you build a sales team, whatever. There's a way to solve this that's not removing the heart and soul of the company. Now, if you're a completely dysfunctional lead, okay, there you go. Thank you. Now, if you're a sociopath and completely driving the company into the ground, like Elizabeth Holmes was at Theranos, and they tried to remove her, if you read the book Bad Blood, they tried to remove her in year 3, and she talked them out of it. And the absolute right thing was to take the sociopath out of the head seat, because literally this was a pilot who was suicidal with a bunch of people on the airplane and just drove the plane into the middle of the ocean or into a mountain. So if you are truly a sociopath, then yes, you should give that CEO reign out and just keep a little distance, in the plane. But if you're not a sociopath, then keep control of the plane. Let's give him a big round of applause.
Thanks.
Good job. All right, we're moving along nicely here. Let's have one more person come up. All right, we got room. We got time for 2 more? We'll do 1 more. Okay, come on up. I'm just fucking with you guys. You know I'm going to do them all. I like to keep the founders on their toes. Okay, you have 20 seconds.
Hi.
You have 60 seconds. 3, 2, go.
Hi, everyone. My name's Marae, and I'm the founder of Epic Catch. Epic Catch is an experience booking platform that simply finds you someone to go out with based on the experiences you would like to share. We list the experiences on our app, both available in the iOS and Android stores. It started because at the age of 30, I had it all, and then all of a sudden, my life really changed, and my friends started getting married and having children, and I was still single with no more friends to go out with. Since I started using Epic Catch, I no longer feel isolated or lonely. I found a group of friends, both male and female, that are willing to go out with me on a regular basis, both on a one-on-one scenario and in small group settings. So I kind of found my own tribe through a product that I produced. And my question for you, Jason, is we've got some advocacy, we've got some traction. I don't think the investors here in Australia quite believe in what we're trying to achieve. It's a little bit confusing. People get confused about what we are, so we're a bit ambiguous. But my thing is we've got brand advocates, we've got advocates in there that are early adopters. How do we amplify that message?
Okay. I've got to compose myself here because it was very touching when you lost all your friends.
It's a true story.
It's a true story, I know. What's the name of this company?
Epic Catch.
Epic Catch.
Epic.
Epic Catch.
Yep.
Ah. Do you view it as a dating app or a dating app for people who are too proud to use dating apps?
Do you want me to be really honest?
Yeah, be candid.
Okay, good. Our members are single and looking for a romantic connection, but that's not the only thing that they're interested in doing.
Would you say it's half of it? Half the time they want romance?
Yeah, but that's not actually where we're getting conversions.
When you're creating a new product that doesn't exist in the market, it's incumbent upon you to either prove it or to rely on the 1 in 100 investors who likes to take flyers. So if you know the story of Airbnb, the founder, I think he emailed 40 VCs, he got 40 no's, right? It was just like, no, we don't want to sleep on somebody we don't know's couch, right? And you're in that similar space where they can't relate to it, they don't understand the need, and so you'll have to prove it through some amount of traction and engagement. So if people were doing this, you know, and Snapchat did this. Snapchat proved through engagement that there was a need for another social network that was video-based because nobody understood that. But they said, look, people are opening this thing 14 times a day. I think that was the number of the early users. It was 14 or 15 times a day with the ephemeral messaging. And when the video came out, it became like 30 times a day for the top third of users. So they just said, forget about the bottom 2/3. Let's just talk about the people who are addicted. So I think leaning into the people who are addicted to the platform and use it daily, weekly, and over-servicing them and seeing if they'll pay or they'll invite other people so it grows. You really have two choices in terms of proving it. One is the utilization of those people and your ability to acquire more of them, or the ability of those people to generate revenue. Those are the two things that I think will pull investors in. But you don't have to worry about what anybody thinks about this. Worry about what your users are getting out of it. Because what happens as founders, we get very concerned about what investors think. We heard it before. Should I be the CEO? Or, you know, people talk about whose money to take, and I got this bad advice about we should be an adventure site or we should be for general tourism. Again, trust your gut. You're the one who had the insight. You lost all your friends. You were home alone, sad, crying, no friends, nothing to do, eating pints of ice cream, watching Netflix. It was really sad. It was horrible. And you did something about this utterly horrific, horrible life that you were living. You pulled yourself out of this malaise and Haagen-Dazs ice cream and just horrific, staying up till 4 in the morning, binge-watching stuff. So since you've done that, you know what it takes. And now you're happy again, right?
I'm like blissfully happy.
Exactly. So you know the secret, right? You're the Indiana Jones in this story. You know where the temple is. You know where the idol is. You know how to get in and get out without getting killed. Fuck everybody else. Just keep pursuing that.
Oh, just be careful with how you say that.
What? Oh, no. You said it was half the people were there to hook up. And if it is for hooking up, then you should lean into that and be like, adventure and even more adventure, you know? Like, adventure and more.
We don't support hookup culture, although there's a prolific hookup culture here in Australia. But you're married, so it doesn't matter.
Yeah, no, please, leave me out of this. This is live streaming, and it's live streaming to my house right now. I can be sure of that. But if romance is part of it, then why not lean into that, right? So if it's about friendship and then maybe friendship and more, great. You have to be true to what it is that's your insight, not what other people think. So having a meetup with your customers, have you done that yet, where you meet them
Yeah.
and hang out with them?
Yeah.
This is what people don't do that's like super important. Whoever those top 20 customers are of yours, just ask them to get a cup of coffee. Ask them if they want to come over to the office and have you know, some breakfast or lunch or drinks or talk about the product and give you advice and just listen and listen and listen. And you might hear over and over again that it's about hooking up, it's not about hooking up, it's about new things that you haven't tried before, or it's about finding somebody to do things that, you know, you've always done but just didn't have somebody to do it with. So like it might be I've never played tennis and I want to learn, or it might be I used to play tennis and I just need somebody to come with me every week to play tennis. So just focus on that top 20% of your user base, and everything else, I promise you, will work out. And don't let anybody knock you off your game and tell you you don't know where the temple is and where the idol is and how to get in and out there and get that, because you already proved it. Mike, any general thoughts?
Well, the bad news, I think, is a lot of people have tried this. I think every conference we hear one company trying to match people and experiences. The good news is nobody's done it to scale yet. So I think, as Jason says, if you believe in yourself and you believe you can get it done, you should move forward.
Yeah, I mean, almost every great business had a handful of people who tried it before. Google was like the 11th search engine. There was a way to order taxis on Vindigo over SMS back in the day, and the taxis would never show up, but it did exist. And so, I mean, so the concept was there. The idea wasn't new. Back to the point about like ideas and everywhere and the marketplace of ideas. Forget the ideas. Do the execution. So you're going to find something there. And YouTube was probably the 200th video sharing site. But because every other video site charged you to upload a video and they didn't, the dynamic of posting videos changed from being scared of a video going viral to trying to get a video going viral. When you used to post a video to the internet, you didn't want a bunch of people to watch it. Because if they did, you would get a $1,000 bill from your hosting company or a $10,000 bill. And if you had a cap on your bandwidth, and everybody remembers websites where it'd be like, this person's cap has expanded and now you cannot watch this. And then the person would get like, oh my God, I owe $800 to my hosting company. And then the people who were doing YouTube said, you know what? Bandwidth and storage are going in the direction that we could actually offer unlimited. And then people started uploading stuff that they didn't own. They uploaded Lazy Sunday from Saturday Night Live. They uploaded all this crazy old video. And they were like, yeah, screw it. I don't have to pay for it. And that changed everything. So what's the why now for your business? The why now for your business, I think, is this hookup culture may have the fact that people are so willing to just hook up. Maybe the idea of going and doing something with somebody that's not hooking up seems like not as scary, right? Like if you're willing to just go hook up and have sex with somebody, like going and play tennis seems like a lot more normal.
It's vulnerable.
Vulnerable.
Well, yeah, we kind of call it vulnerability here.
Yeah.
So Aussie people don't date properly. Oh. I don't know. Oh my God, did I say something
I don't know.
wrong?
I don't want to get into like a whole therapy thing here. You lost all your friends already, and I don't know, the dating issue. There's some cultural things that I'm not going to be able to bridge for you. That being said, on a startup basis, follow what your gut tells you, and don't be deterred by the fact that there's 15 startups that have gravestones, and there's like a plot waiting for you, because sometimes you're the one who makes it out, you know? And I think you could be the one who makes it out.
Thumbtack is a good example of this, because there were a lot of people that were trying to connect providers with users, and they were typically making it a marketplace. And Thumbtack did something really interesting. They charged the providers to post
They charged them for the leads.
Right.
To buy the leads,
right.
yeah.
And so what they did was they eliminated all the non-quality providers, because if you were going to pay for the leads, you had some self-confidence that you would do a good job. And that was kind of an interesting hack, I think, in terms of what made them not that next gravestone.
Let's give her a huge round of applause. Okay. We got to wrap up here because people want to eat some food. We have one more? All right, we'll do 5 more. Bring them up. All right.
Appreciate it. Thanks.
Thanks. You feel like giving me a fist bump?
Oh, yeah.
I saw you making it halfway. Go for it. All right.
Thank you. All right, cool.
All right.
Hi, guys. My name is Chris from Be Smarter. All right, so I'll just jump straight into it. So imagine this. What if you could get a hotshot lawyer, a savvy accountant, or an awesome developer without paying any money? It'd be great, right? I mean, that shit is expensive, especially if you're a small business. In fact, 70% of small businesses experience difficulty covering short-term expenses. That's why we're creating Be Smarter. Be Smarter is an online platform that enables small businesses to barter their services. Basically, what you would do is provide services that you need in exchange for services that they need as well. So, I think I screwed that one up.
Okay, don't worry about your script. What's your question for us? We understand it.
All right, question is, I wanted to go a bit longer, but are you interested in the concept at all to be an advisor?
I would be super interested if you put a cryptocurrency between it, and then we could come up with a unit for the value of the service that would be determined by a market that was free. And then the individuals could price their services.
Absolutely.
And pay for it with a currency.
We have an agreement function that facilitates
I'm
that
fucking
process.
with you. What I'm describing is a currency instead of a barter economy. So it's either a barter economy or it's a currency. And the reason currency has been so fabulous for a couple of thousand years is that it's global and it just works and you don't have to think about it. You're an attorney, you're $800 an hour, that's too much. You're an attorney, you're $600, that's just right, perfect. Oh, you're an attorney who doesn't have any free time, you don't need any more customers, you raise your rates, you lose the bottom third of your shitty clients and you get to upgrade them. The currency system is not broken. So everybody who's tried to come in with a barter system has struggled with why? Why now? And so that's going to be my question to you, which is why will this work now? Has something changed in the last 10 months, 10 years that makes a barter system viable today when this idea I've seen, it's another one of these perennial ideas like food apps, dating apps, barter apps, we see the experience apps, we see the same ideas over and over again at these type of conferences or as investors. What's changed now that'll make it work?
I think the increasing trend in the number of small businesses, startups, freelancers at the moment. So I think recently in the US, it's expected that the majority of the workforce would be freelancers.
Okay, I'll stop you there. Freelancers, their number one pain point is?
Money.
Getting paid.
That's right.
So now your solution for their problem is to not get paid.
Not get paid. In certain instances, you can acquire services that you need in order to perform your service. So
got it. And that takes time and it has friction. So the businesses that tend to win are the ones that take out friction, right? So an example of friction would be you're leaving your Uber and you have to decide if you want to tip or not, or you're getting into an Uber and you have to explain to the driver where you're going. Now you no longer have to explain to the driver where you're going because you put it in the app before you got in. You don't have to tip because it's included or you can do that afterwards. And there's a GPS function. So that would be the why now of Uber was GPS and smartphones. So for you, I think your why now doesn't work. Now, I wouldn't want to dissuade you from it because there might be some other thing that you have some unique insight into, just like the last two people who pitched, the adventurer and the search and rescue guy, and the lonely person whose friends got married and she didn't, and she needed more friends. Both of those situations, those were like very unique individuals who had deep conviction. I don't sense the deep conviction with you. Do you deeply want to barter your services? How did you come to this idea?
Well, I'm new in the startup scene. So my previous profession was I was a lawyer. So a lot of the time, a lot of people need legal help. Whenever I'd say I have legal expertise and I can help out in your situation, I would just offer it for free as a gesture of goodwill. But at the same time, you see how much value they got from that. And in exchange, they would provide me with something whenever I needed it. So that's the real sharing economy. One of my friends calls it the karma economy as well. So it's common among startups because what do startups not have is money.
Okay. So you're describing the favor economy. One of the things about the favor economy is that when it does work, it works without an expectation of reciprocation. And the thing with barterers is they have the explicit purpose of reciprocation. So that might be two different things. You might have an interesting idea in people helping people who need it for status. And Quora is a perfect example of that. People spend a lot of time on Quora helping people freely, Medium posts, blog posts as well, and they don't do it with the expectation of an immediate return. They expect to be a cultural return, like a influencer type return. So that's why everybody is trying to be an influencer. So I hate these bartering businesses. They don't make sense to me because they add friction. So I would really think if your original idea has something to do with how much you love to help, maybe build something about helping each other that doesn't include barter, which includes friction, which might stop people from using it. What are your thoughts, Mike, on barter economies?
So I would have a cautionary comment, which is you started off by saying companies that don't have a lot of money. Typically, the government doesn't like when you exchange services and you don't exchange money because they want their taxes whether you want or not. And I think that puts you in the awkward and difficult position of being the definer of the value of the services, and it could just lead to a lot of headaches down the road.
Yeah, that is an issue that came up with these other bartering services, is that when they became too big, the government was like, oh, if you're doing this as an end run to tax, the services that you're trading are now taxable. That has happened in other jurisdictions, I remember. Any last minute feedback or thoughts?
Oh, no, that's all good feedback. I've heard some of that before as well. But with respect to the value of the service, we allow the users to actually value their service and then offset the cost of those services using an agreement function. So that's the way we do it, as opposed to creating a credit system where we value the service of people.
Listen, you're wandering the desert. You have a feeling there's like an oasis somewhere over here. I encourage you to pursue that, but understand it could be a mirage, right? And sometimes that happens. And here's the good news about what we do as founders. If it is a mirage, you're not going to die of thirst in the middle of the desert. You just have to brush yourself off and say, okay, that was a mirage. I thought barter would work. There was no why now. There was nothing that changed in the environment that would have sparked this. I can't will it into being. And then you can put the idea in your moleskin, and then maybe in 5 years you revisit it, right? And you put it on your calendar as a repeating one-year event. Think about barter and link to this video. And maybe in 3 or 4 or 5 years, maybe there'll be something like some global currency that's digital and goes up in value and uses cryptography so it can't be hacked. I don't know. I'm just spitballing here. But there may be something that emerges that could make this possible. But I appreciate you for having the idea and giving it a shot, and prove us all wrong, or prove the two of us wrong, whichever it is. Well done.
Excellent. Thank you, guys.
Thank you. All right. Thank you all for sticking with us. Go grab some lunch. And one quick note, we're doing this Startup Safari. This is a concept we had. There's going to be 2 of them, an 11 a.m. and a 1 p.m. one. You have to sign up for this. The first one's about raising funding. The second one is how to launch ventures as a startup with a corporate partner and corporate partnerships. Those are free, but they can only fit 100 people. So go sign up at launchfestivalsydney.com/safari. Next year, we want to have like 20 stops on the safari, including your startup. So go check out these 2, and next year, let's try to have 10 or 20.